Okay, good morning everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up so that we can start the discussion? Done. So, yesterday we started with the concept of taxation. Right, within taxation, we discussed various concepts. For example, the idea of a GST. The most important one is GST, goods and services tax. What we have discussed in the goods and services tax, first and foremost, we have seen earlier why the indirect taxes led to cascading effect. Right? I hope remember the idea of a cascading effect. In cascading effect, what would happen? A tax would already be there in the product or on the price of the product, and the government would again impose a tax on the price, which is basically tax on tax. And whenever there's a tax on tax like this, the market price of the product would automatically increase. The burden on the consumer would be very, very high. And this would basically lead to a lot of issues. So government of India, sorry, not the government of India, the state governments decided that let's introduce a new concept wherein we are going to provide input to tax credit. That is basically the idea of a VAT system, value added taxation. So all the states in India introduced VAT. And in case of the VAT, what would happen is whatever taxes you have paid on the inputs, whenever you purchased a product, whatever taxes you have paid, that would be credited back to you once the product is sold. That process is referred as a input tax product. I'm sorry, input tax credit. With introduction of input tax credit, we expected that the issue of cascading effect would be addressed. The consumers would get the benefit. But the problem was VAT is a state subject. VAT was introduced by the state governments. What if a central government will impose a tax? Right? For example, I talked about central sales tax. Right? CST, central sales tax. So central government imposed a CST, and because of this CST, there was a lot of cascading effect that was taking place whenever there was interstate trade and commerce. So citing this only, government now has introduced the idea of a goods and services tax. Now what we have discussed yesterday regarding GST, GST will subsume indirect taxes in India. Right? We want to subsume means include all those products which have separate indirect taxes now will be brought under the concept of GST. Right? Indirect taxes will be brought under GST. With this, we will make one nation, one indirect tax. I hope remember the central theme of GST. One nation, one indirect tax. So idea is with introduction of GST, all these indirect taxes will be brought under GST. It will make it easier for businesses to conduct sales in India. It will make it easier to do business in India. Right? That is one reason. Second reason is if you have only one indirect tax, cascading effect would be addressed. Today I'll show you calculations. Like I've told you yesterday, today I will show you calculations how GST will work whenever there is a interstate trade and commerce and intrastate trade and commerce. Let's have a discussion in some time, please don't worry. Transportation would become very easier. Cost of logistics would reduce with the introduction of GST, etc. So with this objective, GST amendment bill was introduced, that is constitutional amendment bill was introduced, was passed, and the constitutional amendment act was introduced. Under this, we have set up GST Council, Article 279A, GST Council. Composition is center plus states. Center, most important person from the center is Finance Minister. The Finance Minister of the Union Government is the chairperson of the GST Council. In addition to this, we also have representation from the states. We have revenue ministers or the finance ministers of the states. Plus union territories which have state legislatures are also present. Whenever the decision is supposed to be made in the council, it is supposed to be made with at least 75% of present and voting. At least 75% of present and voting. and the voting power is divided between center and state. 1/3 is given to the center, 2/3 equally divided between all the states. Then what are the other features of the GST? What are the other features of GST? In India, we have dual GST structure. I hope remember this. In India, we have a dual GST structure. What do you mean by dual GST? The GST rate always is broken down into two components. It is always broken down into two components. One is called as a CGST and the other one is called as an SGST. And whatever GST rate you are talking about, it is always broken into two equal components. For example, yesterday I told you 28% will be broken into two components of 14% each. 12% will be broken into two components of 6% each, which means 6% will go to the center, another 6% will go to the states. That is basically the idea. And here itself I have told you, GST is a destination-based taxation. Do you remember it? GST is a destination-based taxation. What is the meaning of a destination-based taxation? The state where consumption will happen, it is the state which will get the SGST component. In fact, I've told you, VAT is a destination-based taxation. GST is a destination-based taxation. What about the central sales tax? Right? We have discussed this yesterday also. What about central sales tax? CST is an origin-based or production-based taxation. That is the state where production has happened. That state would get the GST component. Okay. Then certain goods are exempted. What goods? Alcoholic liquor for human consumption. Even today, alcoholic liquor for human consumption, that is a domestically produced good, would attract a tax from the state government. It will attract a tax from the state, not from the center. Apart from this, the council is also yet to decide when they will announce taxes on fuels such as petrol, diesel, aviation turbine fuel, gas, etc. We are yet to announce it. And I have also told you what is the reason why they are worried about announcing a GST on these products. And finally, we discuss the concept of the compensation. We discuss the idea of a compensation. What is the idea of a compensation? When the states were asked to give away the taxation powers, the states were concerned about revenues. They were worried about the revenue protection. That is, what if I give away the taxation power and if I do not collect sufficient amount of taxes? What if I don't collect sufficient amount of taxes? That is a precise reason. For 5 years from the date of implementation of a GST, center announced compensation. Whatever is the revenue losses, that is, I hope remember yesterday we discussed, this was the slide that we ended the discussion upon. 100% of the revenue losses for a period of 5 years would be provided in the form of compensation by the central government. And for this I said, center identified certain commodities under 28% slab. Center identified certain commodities under 28% slab. In addition to the GST, it also implemented, the GST compensation cess. GST compensation cess. And I said GST compensation cess, even though the 5-year duration is over, the GST compensation cess has been continued. Right? Is this where we stopped yesterday? Let me continue. I told you certain more points are there regarding compensation. Let me provide it now. The government of India, like I've already mentioned, for 5 years announced compensation. And in order to provide compensation, center also announced the compensation cess on some of the commodities which fell under 28% slab. And understand this, argument was, we will collect compensation cess, use this money to pay compensation to the states. Now this argument would work out very well if the cess collected is greater than compensation. I repeat, if the cess collected is greater than the compensation, right, this will function very well. But what if the amount of cess collected is lower than compensation? I'll give a very simple example. Imagine you are supposed to pay compensation of 1000 crore rupees to all the states in India. Okay, you are supposed to pay 1000 crore rupees compensation to all the states in India. But the amount of cess you have collected is only 400 crore rupees. Now, do you think 400 crore rupees will be sufficient to pay compensation of 1000 crore rupees? Let me know. Do you think cess of 400 crore that you have collected will be sufficient to pay compensation of 1000 crore rupees? Of course no. Right? Of course no. You have 400, you have to pay 1000. How is that possible? So in that case, has it happened? Has it happened in India? Of course yes. Financial year 21 and financial year 22. Financial year 21 and financial year 22. The amount of cess collected was smaller than the compensation. And now there's a problem for the government. What is the problem? You have collected only 400 crore, but you're supposed to pay 1000 crore rupees. That's not possible. And if you'll ask me, sir, why the amount of cess collection was lower? Please look at the years and tell me. Look at the years and tell me, do you think financial year 21 and 22 are known for very good growth rates in India? I hope you understand. Do you think financial year 21 and 22 are the years known for very good growth rates in India? Of course no. There was a pandemic. And when there was a pandemic, what will happen to GDP? What will happen to GDP? GDP automatically took a hit. GDP went down. And is it okay if I say, if the GDP will go down, GST collections will also go down? Think of it. Right? Just a basic connection. If the GDP will go down, right, what will happen to GST collection? GST collection automatically will go down. Some of you will get automatically confused. How, sir? How it is connected? What is GDP? Let me know. What is GDP? Market price of all the final goods and services produced in India. I am saying the market prices of all the goods and services, that is final goods and services, has gone down in India. If the market prices of all the final goods and services collected together will go down, don't you think the GST collection will also automatically go down? That's a basic connection between both of them. Right? So GST collection also went down. And if the GST collection went down, don't you think cess collection will also be affected? So there was a time period when the cess collection was lower than the compensation, right? The amount that the states were supposed to receive for 2 years. Financial year 21, financial year 22. And what central government did was, central government initially said, this has happened because of act of God. I hope you understand. Center initially said, this has happened because of act of God. So I will not be able to provide all this compensation to you. But the states did not agree to it. States basically said, right, no way, you have told us for 5 years, any revenue loss, you will give me compensation. That is the precise reason, understand this, in financial year 21 and financial year 22, Government of India borrowed 2.69 lakh crore rupees. I will repeat the statement. In 21 and 22, Government of India borrowed 2.69 lakh crore rupees to provide compensation to the states. Now, because Government of India has borrowed money, government has to repay this. All of you will agree with me when I say this. When Government of India has borrowed, Government of India has to repay this. Right? So what has happened? Understand the story. The compensation period for 5 years is over. To pay for compensation, government has borrowed from the market. Now somebody has to repay this. Government of India says, I will repay this. So what has the Government of India done? We have GST compensation cess. The tenure of 5 years is already over to pay compensation. But government has said, we will continue to implement GST compensation cess. I'll repeat it. The Government of India said, we will continue to implement GST compensation cess and collect it. But now, we are not going to use this cess to pay for compensation to the states. No, 5-year duration is over. We will use the cess to repay the borrowings. Any doubts here? We will use the cess to repay the borrowings that we have done in 21 and 22. That is basically why, despite 5-year duration of compensation cess being over, government is still imposing the cess and collecting it to repay the loans that they have done in the past. And that is basically the concept here. Right? Now, before I go forward, please have a look at the picture here. Do not by heart the whole picture. Sir, should I draw a square? And within the square, should I draw 2 more circles? And within the circle, should I keep on drawing smaller circles in the civil services? Absolutely no. What is the use of this? The use of this is simple. There are certain taxes at the central level and the state level which have been subsumed under GST. The list is provided. Please go through the list. Now, some of you will start doing PhD on all of these taxes. Let me ask you a very simple question. If a tax has been already subsumed under GST, do you think that tax should be studied individually now? Think of it. Just think of this question. If a tax has been subsumed already under GST, it doesn't have any individual implementation now. Should you do a PhD thesis on that tax? Absolutely no. Don't waste your time. Simply by heart 3 to 4 taxes here, 3 to 4 taxes here, go forward. Right? You can take 1 year to do a PhD on all of these taxes, but UPSC will not ask you individually on these taxes. Why? These are not individually implemented now. These are part of the GST. Okay? Done. So this is a discussion regarding GST. Now, earlier one of the criticism, follow this carefully. I'm giving you a critical evaluation now. Earlier, the taxation system was there. We had the sales tax. We had the excise duty. Do you remember this? We had the sales tax, we had the excise duty regime. One of the criticism regarding this was multiple taxes are there. Multiple taxes are there. And when we have multiple taxes, it becomes very difficult to implement the tax regime. So what we have done? We have replaced these taxes with one tax now. That is a concept of GST. But within GST also there is one more problem now. What is the problem? We have multiple rates under GST. We have 5%, we have 12%, we have 18%, we also have 28%. Apart from this, we also have 0%. We have 3%, right, on gold, etc. So have a look at this. The criticism that we levied against the earlier tax regime was multiple taxes are there. Very difficult to implement. But what we have done under GST? We have only one name of the tax, but under GST also there are multiple rates of, right, the GST. Now these rates are referred to as slabs. Done? These rates are referred to as GST slabs. Now what is the problem with having multiple rates? Let me give you a very simple situation. Imagine you want to manufacture this bottle, you will purchase 4 raw materials. You want to manufacture this bottle, you want to purchase 4 raw materials. Let's start. What if one raw material will attract 12%, another will attract 5%, remaining 2 will attract 18% GST rate? Tell me, is it easier to implement such a taxation system? Let me know. Right, very simple question, by the way. It should not be very difficult for you. You want to purchase 4 raw materials because you want to manufacture a bottle. Pay 5% on one, 12% on another, 18% on remaining 2. Is it easier to implement? Of course no. But then why did Government of India go for this structure? We criticized earlier the taxation regime precisely because of this. Now we are having the same structure. Why? What is the reason? Let's look at it. I'll discuss 2 aspects here. Why Government of India chose this structure, and second, what are the problems with this and what is the way forward? Let's start. First one, imagine this bottle will attract 5% GST. Simple example, imagine this bottle will attract 5% GST. What if the cost of the bottle, understand this, what if the cost of the bottle is 10,000 rupees? That is, the bottle is a very luxurious product. This bottle is a luxurious product. Sir, how can bottle be luxurious product? Have you seen those bottles which are carried by celebrities? Just check. After the class, just check. Have you seen the bottles which are carried by celebrities, which have sensors, which will keep on giving you alarm, which will tell you what is the quality of the water that is there in the bottle, etc., etc. Again, UPSC will not ask you that, don't worry. Are there bottles which are luxury products? Of course, yes, there are bottles. Now, simple question. Your argument is, sir, we should not have multiple rates, we should have one rate. That's your argument. We should not have multiple rates. It is very cumbersome, very difficult, etc., etc. Now, what if only one rate is there, that is 5% GST? Point number one. A luxury product, do you think everybody will purchase in India? Think of it. A luxury products, do you think everybody will purchase in India? No. Very few people who have lot of money will purchase the luxury product. Such as, let's say, the bottle example that I gave just now, or Audi car, or an Audi car. On the other hand, don't you think especially the middle class households as well as lower income households will purchase other products such as the Hawaii chappals or slippers? Understand the difficulty here. Point number one. Should you impose same rate of GST on slippers as well as Audi car? I hope you understand my point now. Should you impose same rate of taxation on a Hawaii chappal as well as an Audi car? No, that will be unfair. That will be unfair. On the face of it itself, you'll understand. Sir, how, sir? Audi car is purchased by rich people. We should collect more taxes from them. Right? So, one tax rate is not feasible here. Second one, if I have a very low tax rate, only one rate under GST. But if it is very, very low, tell me what will happen to tax revenue collection of the government. What will happen to tax revenue collection of the government? The tax revenue collection of the government will go down. Now, some of you will give me a recommendation. So, in that case, let's have only one rate of GST, but not low, but at very, very high rate. Let's say rather than having 5%, let's keep it at 18%. All the goods and services, let's charge 18%. Now tell me what is the impact on poor people. Tell me what is the impact on poor people. Right? Don't you think the market prices of many of the commodities will suddenly go up? Poor people will not have sufficient money to pay. That's a problem. And second, what will happen to inflation? Right? Automatically inflation will also go up. So have a look at this. This is the problem. This is a problem. Now question arises, or I will ask you a question, then what would you recommend? Having low rate, you say there is a problem. Having a high rate, you say there is a problem. So tell me what is the solution to this? That's the reason government decided, okay then, let's identify certain goods which are consumed by poor people. Let's charge it at lower rate. Let's identify certain goods which will have a very high consumption in rich people circle, that is by rich people. Let's charge at a very high rate. That is the precise reason why we have decided to go for different slabs, different rates for different goods. All of these are okay with you? Let me know. All of these arguments in favor of different rates is okay with you? Now, what is the concern then? What is the concern? We have decided, let's go with this. What is the concern? First one, administration is very, very difficult. Right? What do you mean by administration? I asked you a question in the beginning. If you're purchasing 4 raw materials, 3 different GST rates, is it not difficult for you? Is it not very cumbersome process for you? Because you'll have to keep a receipt for every raw material that you have purchased. You will have to submit those receipts to the government. Government officials will check all the receipts. You might simply say one of the raw material attracts 5%. One of the material attracts 5%, but government officer will say it's not 5%, it's 12%. So it's very, very difficult. Administration is very difficult. And moreover, understand this, I'll come back to this. Moreover, it goes against the central theme of GST. What is the central theme of GST? Central theme of GST is one nation, one indirect tax. Central theme of GST is one nation, one indirect tax. Do we have one indirect tax here? Or do we have one rate of indirect tax here? Of course, no. Multiple rates are there. Now have a look at this. Second one is much more technical. Focus on this. It will lead to inverted duty structure. It will lead to inverted duty structure. Let's start now. What is inverted duty structure? Follow this very carefully. Let me check whether I've written anything. Nothing is there. Let me start. Generally, what will happen? Generally, here is a manufacturer, right? Or let's say company A. Company A will purchase raw materials and let's say pay 10 rupee tax. Simple. Company A will purchase raw materials and pay 10 rupee tax. Will manufacture a bottle, sell it in the market, collect a 15 rupee tax. Now what is the process? This 10 rupee which was collected by the government will be given back to the manufacturer, and the manufacturer has collected 15 rupees from the customer, will pay it to government. Any difficulty? Please do let me know. Any difficulty here? Government has collected 10 rupee in the first step. This is step 1. Government has collected 10 rupee in the step 1, and in the second step will collect 15 rupees. But what the government will do is, government will give this 10 rupee back to the manufacturer so that the manufacturer will not transfer it to customer. If the manufacturer will transfer it to customer, that will become cascading effect. That will lead to cascading effect. But let me ask you a very simple question. Imagine you are a very small manufacturer. You are a very, very small manufacturer. What do you mean by a small manufacturer? You do not have sufficient resources. You do not have sufficient resources. Right? You do not have sufficient money to pay for wages of the employees. You do not have sufficient money to purchase raw materials. You do not have sufficient money to pay electricity bills, etc. And trust me, there are many manufacturers like this. Don't say, sir, this is a hypothetical situation. Absolutely no. When I say this, trust me, there are a lot of manufacturers who face this problem in India. Now, follow this carefully. Now, what if I say the 10 rupee that you have given to the government, the 10 rupee that you have given to the government will give it back after 30 days. The credit will be given to you after 30 days. Now, can I put the same thing in a different way? It simply means that 10 rupee is not available for you for next 30 days. Is it okay? Right? Understand the logic here. Understand the logic. That 10 rupee you have given it to government. Government will give it back to you. But they will give it back to you, let's say, after 30 days. Which means for 30 days, that 10 rupee is not available for you. I'll call this as the capital getting stuck with the government. Capital is getting stuck with the government. Any problem in understanding this? The capital is getting stuck up with the government. Now, this is a problem. All of you agree? This is a problem. Now, what is inverted duty structure? What is inverted duty structure? Let me start. Here is a manufacturer A. Manufacturer A will pay 15 rupees tax when they purchase raw materials. When they purchase raw materials, they'll pay 15 rupee tax. And when they sell the goods, they will collect a 10 rupee tax from the consumer and pay it to the government. Pay it to the government. So step 1, A has paid 15 rupees on raw materials, which is there with the government. They will return it. Step 2, A has sold the product, collected 10 rupee, which they will give it to government. This is called as inverted duty structure. This is referred to as inverted duty structure. What is the inverted duty structure? whenever the taxes that you pay on the inputs is greater than, I repeat, whenever the taxes that you pay on your input is more than taxes that you collect on the output. Any difficulty, please do let me know. This is a very basic idea, understand it once, right? Automatically you will come to know what they are talking in the future in the newspapers. What is the inverted duty structure? What is, right, the tax that you have paid when you purchase the input, it is greater than the taxes that you have collected when you sell the output. You will give the government 10 rupees and the government will give back credit of 15 rupees to you. Now tell me, simple question. I'll write this as example 1 and this as example 2. Now don't you think the manufacturers will face more problems whenever there is an inverted duty structure? Let me repeat it. Right? I'll repeat the statement. Don't you think the manufacturers will face more problems when there is an inverted duty structure in the market? Sir, no sir, they will not face more problem. What are you looking at? What are you looking at? Right? Understand this. Argument is, Arey Baba, listen to my lecture, no? Listen to me very carefully. You will purchase steel to manufacture this. Okay? You will purchase steel to manufacture this. Will you pay tax? Go step by step. You will purchase a steel to manufacture this. Will you pay tax? Yes. And under input tax credit, the government will give the tax back to you. That is, let's say, you will purchase a steel today and today itself government will give you that 10 rupee back. Will you prefer this or not? Just think of it. You will purchase steel today, you will pay 10 rupees to the government and the government will give it back immediately to you. Which means 10 rupee that you have given, you will get it back immediately, you can use it. You can use it to pay taxes again to the government. But what I'm saying is, you will purchase the steel today, but the government will give the 10 rupee back after 30 days. Does it not mean that for the next 30 days, that 10 rupees is not available to you? I hope you understand. For the next 10 days, that 10 rupees is not available to you. Right? You will get it back. I'm not saying you will never get it back. But I am saying, right, I am saying they will give it back to you after 30 days. I hope you understand this. Right, so that is the idea. Now in the inverted duty structure, what happens? Whenever you purchase inputs, you will pay more taxes compared to when you will sell the product. Does it happen? Of course it happens. I'll give a very simple example. Imagine you purchase a raw material. You purchase a raw material and the tax rate applicable is 18%. Think of it. Think of it. Right? You purchase a raw material and the tax rate is 18%. You sell the final good, tax rate is 5%. Use the calculation, automatically you will understand. You will purchase a raw material, let's say worth 90 rupees. You will pay a tax of 18%. You will add a value of, let's say, 10 rupees, profit, labor, etc. You want to sell it in the market at 100 rupees, the tax rate is 5%. Now tell me, is it not inverted duty structure here? Is the logic okay? Is it not inverted duty structure? Of course, yes, it is an inverted duty structure. But what is the problem with inverted duty structure? The problem is that in inverted duty structure compared to normal structure, more and more amount will get stuck up with the government. In a normal example, how much money is getting stuck up? 10 rupees. In the inverted duty structure, don't you think more and more amount of money will be stuck up with the government for longer duration? Right? That is the problem with having multiple rates. Rather than multiple rates, what if only one rate was there? Will there be inverted duty structure? Think of it. I hope you understand. In normal rate, right? I mean, rather than having multiple rates, what if there is only one rate under GST? Will there be inverted duty structure? No, there will not be any inverted duty structure. That is the argument here. Because we have multiple rates, we are facing inverted duty structure. Now, many of you will become experts here. Many of you will become experts. What you will do is, sir, why are they doing this? Right? It is wrong, etc., etc. You will start giving recommendations to government. But it is not that easy. I hope you understand. It's not that easy. You are sitting very nicely, cozily in your home and giving recommendation to government. Sir, why are they not changing it? For a very simple reason. Follow this next point carefully. Are you sure that this raw material which attracts 18% is used only for bottle manufacturing? Let me know. Are you sure that this raw material that I'm talking about, it is used only in bottle manufacturing? Absolutely no. Absolutely no. You should be very clear with that. Right? Don't give recommendation to government because they already have thought of all of this. Don't say, sir, those are very bad people. They don't have anything to do. What if I say the same steel is used in manufacturing of Audi car which attracts 28% GST? Now tell me, in the context of Audi car, is there inverted duty structure? Think of it. Same product, that is steel, right, which attracts a GST rate of 18%. Imagine, right, V is also used in manufacturing of Audi. In fact, it is used. And the Audi will attract 28%. So do you think in case of Audi car, there is an inverted duty? Absolutely no. So that is the precise reason. That's the precise reason why, despite trying so much, there is inverted duty in the market. Now, some of you are asking very interesting question here. Sir, why will the government collect it if they have to give it back? Now, imagine you are the Prime Minister. It's around 6:40. I'm making you Prime Minister. Answer to my question. I will ask you how many manufacturers are there in India, how much is their revenue. On what basis you will tell it? Let me know. I am asking a simple question, right? You are basically telling the government, sir, this is a useless process. Why are they collecting it if they have to give it back? I will ask you a question. Tell me, in such cases, if nobody is reporting the data to you, you tell me how many manufacturers are there, how much revenues they are generating, how much sales they are doing. You tell me, how will you find out? I will come to you and I'll pay, let's say, 10 crore rupees income tax. On what basis will you decide whether the 10 crore is correct or not? You should have certain other data, right? You should know how much manufacturing you have done, how much taxes I've paid under GST. Right? Don't you think that's a very good data for the government to have to find out whether the taxes they are paying is correct or not, whether they are registered or not, whether they are following all the guidelines or not, etc., etc., etc. So again, please do not try to correct the government here. Many of you are telling me, sir, if they are collecting it, why are they giving it back? And if they are giving it back, why are they collecting it? Because government has to have lot of data. Otherwise, there will be a lot of tax evasion in the market. Okay, done. Now, what is the way forward then? What is the way forward? You have decided we should have multiple rates. You have decided we should have multiple rates on different goods. And there's a problem with this. What is the way forward? We need to rationalize the structure. Understand this. We need to rationalize the GST structure. What do you mean by rationalization? Reduce the number of rates. Number of rates are very, very high. We have to reduce the number of rates under GST. Now, there was one proposal. There are two rates under GST, 12% and 18%. We should simply merge both of them and make 15%. Understand this. And most of you think this will be correct. Right? There is one rate at 12%. Second one is 18%. We should merge both of them. Right? You will do CSAT calculation. 12% plus 18% divided by 2. And you will simply say, sir, 15%. Exactly middle between 12 and 18, it is correct. Absolutely no, it will be wrong. In fact, this recommendation was given. We should merge 12 and 18 into 15. What is the problem? Revenue losses. If you merge 12 and 18%, it will lead to revenue losses. Why? most of the goods in case of India attract 18% GST rate. I'll repeat it. Most of the goods in India attract 18% GST rate. Now, if you merge both 12 and 18 into 1, that is 15%. Don't you think on large number of goods, the amount of taxes collected will go down? Think of it. I'll repeat it again. Most of the goods and services attract 18%. If you merge and reduce it to 15%, on most of the goods and services, the taxes collected will go down. That will hit the revenues of the government. As per various expectations or estimates, if 12 and 18% are merged into 15%, the amount of revenue losses incurred by the government will be 1 lakh crore rupees per annum. The government will incur a revenue loss of around 1 lakh crore rupees per annum. That is the issue here. Then what is the way forward? What is the way forward? Simply this. There is one institution, NIPFP. There is one institution, NIPFP, and this functions under Ministry of Finance. Now, before you start typing what is the long form, listen to me. I will tell you the long form. National Institute for Public Finance and Policy. National Institute for Public Finance and Policy. This functions under Ministry of Finance. MOF, Ministry of Finance. What was the recommendation of NIPFP? NIPFP recommended that we should merge both 12 and 18, make it 15%. We should merge both 12 and 18, make it 15%. Now, many of you will counter me, saying that, but sir, you said revenue loss. For this, another recommendation was, we have 5% GST. On commodities, we have 5% GST, increase it to 8%. We have 5% GST, increase it to 8%. We also have 28% GST, increase it to 30%. Increase it to 30%. Now tell me, with 12% and 18%, there will be revenue loss. On the other hand, you will collect a more amount of revenue. Don't you think this is a recommendation for rationalization of GST structure? Can I go forward? This is a recommendation for rationalization of the GST structure. Currently, we have 5, 12, 18 and 28. 5, 12, 18 and 28. Rather than this, we will have 8%, right? We will have 15% and 28%. I'm sorry, 30%, not 28, 30%. This is basically the idea. Now, many of you are telling me, sir, but because of this, poor people will suffer. Please check the GST structure. Most of the goods which are consumed by the poor people are taxed at 0%. Are already taxed at 0%. Okay, please remember that as well, because I've told you we have 0% tax rate as well. Right, so this is a recommendation that has been provided by NIPFP. Right, so these are the various concepts that I wanted to discuss. Let me give you now how GST will actually function. Focus on the discussion now. I'm giving you the differences between the old taxation structure and the GST. One, under old taxation structure, right? Under old taxation structure, the goods were taxed separately, services were taxed separately. Under GST, this is not going to happen. Goods and services will be covered under only one tax, that is goods and services tax. Under old taxation structure, national market was not possible. What do you mean by national market here? The product being sold in different states should attract same tax rate. I'll repeat it. What is a national market? Whenever the product is sold in different states, product should attract same tax rate. Earlier, it was not possible. Now under GST, it is possible. The tax rate, whether the bottle is sold in Karnataka, UP, Bihar, Nagaland, right, or Manipur, or even Rajasthan, doesn't matter, the bottle will attract the same rate of GST. Okay, national market is possible. Under the earlier system, cascading effect was a problem. Under GST, we are trying to address the issue of cascading effect. How it is going to happen? Just give me 2 minutes. I'll show you 2 examples. Earlier, there was concept of a tax on production, origin-based taxation. Best example, CST, Central Sales Tax. Whereas under GST, it is a tax on consumption, that is a destination-based taxation. So these are certain very important differences between the old taxation structure and the new one, that is a GST. Now, how it is going to work? I'll show you 2 calculations. Before I start, here is a very important thing that you need to observe. Observe it. 1, cascading effect happening or not happening. Second, inverted duty structure, ITC, input to tax credit, ITC provided or not provided. Third, market prices are going to come down, go up. And fourth one, how the tax GST would be distributed. Let's start. Right, let's start. First one, let me start with intrastate transaction. What do you mean by intrastate? Intrastate means within the same state. A good is produced in the state 1 and consumed within the state 1. Is it okay? Produced and consumed within the same state. Now let's start. Pre-GST, that is before GST, what used to happen? Let's say the price of the product is 1000 rupee. A will sell it to B. Right? Understand this? Now B will use it. To produce or supply services. And B will use it to produce or supply services. So Government of India would implement a service tax. And service tax, remember this, was imposed and collected by the center. Is it okay? Imposed and collected by the center. Now, before I go forward, let me ask you a simple question. Let me check you remember it or not. Imagine you have paid a tax to the central government. Will you get input to tax credit of this from the state government? I'll repeat the question. Think of it. Yesterday we have discussed it. Imagine you have paid a tax to the central government. Will you get the input to tax credit from the state government? Of course, no. They will not give it. Somebody says yes. We have discussed this yesterday, by the way. It's nothing new. We have discussed this yesterday. You have given it to the center. Why will the state give you input tax credit? You tell me. Those who are saying yes, you tell me, why will the state give you input tax credit when the taxes have gone to center? It doesn't make any sense. I don't know on what basis you are deciding. Let's start. A will sell it to B. Now let's say price is 1000 rupee. A has collected 1000 rupee plus 100 rupee service tax. 100 rupee has gone to central government. So B will purchase the product or purchase a service at what price? 1100. Now have a look at this. Now B will sell the product, add certain value, use labor, profit, transportation, etc., etc., etc. B will sell this to a customer. And now have a look at this. Cost price, B will consider it as 1100 because 1000 rupee is the price, 100 rupees is the tax. State is not going to give the input tax credit. So B will simply count it as 1100. Now some of you will ask, sir, why is he expecting it from the state? Simple. When company B will sell it to customer, is it sales or not? Let me know. Is it a sale of a final good or not? If there is a sale of a final good, who is going to impose the tax on it? Who is going to impose the tax? The sales tax will be imposed by the state government. It's very simple, right? It's a final good being sold to a customer. State government will impose a tax. Now let's start. The cost price is 1100. The profit they want to make is 1000 rupee. Now they'll simply calculate this as 2100. Now the state government will impose a sales tax of 10%. So 10% on 2100 will become 210 rupee. Final price paid by the government. Final price paid by the, let's say the buyer, consumer will be 2310 rupee. Sir, is it sales tax or VAT? Apply VAT. But you tell me VAT is a state subject. Service tax is given to central government. Do you think central government will give you a refund here? Do you think state government will give you an input tax credit here? Either ways, you will not get it. Either ways, you will not get it. So what will happen as a result of this? The market prices is higher. First point, market price is higher. Second, any input tax provided in the two steps? No. Third one, what is the burden of taxation on the customer? Very, very high. And the fourth one, cascading effect. Fourth one is a cascading effect. Now come to the GST structure. Come to the GST. Let's start. Price is 1000 rupee. Whether it is a good or a service, it doesn't matter. GST rate, let's say 10%. GST rate is 10%. The B will purchase the product at 1100 rupees. 1000 rupee is the cost plus 100 rupee is the tax. So this 100 rupee tax is collected by the government. Follow the calculation now. B will not count the cost price as 1100. B will count it as 1000 rupees. Why? Many of you will ask me, sir, pre-GST it is 1100, but under GST it is 1000. Why? Simple, because the government says, I will return this 100 rupees to you. I will give you this 100 rupee as input tax credit. Imagine you are the company B here. You have paid 100 rupee tax to the government and government says, I will give it back to you. I will give it to you. So when you know that you will get the 100 rupee back, will you count it in deciding the market price? If you count it in deciding the market price, then you're basically cascading. You're basically leading to cascading. But because you are getting it back, you will not count it in deciding the price of the product. So 1000 rupee is the cost price. Profit is another 1000 rupee. You want to sell the product at 2000 rupee. Now government will again say GST rate of 10%. Apply GST rate of 10%. How much you will impose now? 200. The consumer will purchase the product. Consumer will purchase the product at 2200. Now follow the next step. Follow the next step. In the step 1, government has collected 100 rupee. In the step 2, government has collected 200 rupee GST. Government will not keep full 300 rupees. I repeat, in the step 1, government has collected 100 rupee. Step 2, government has collected 200. So when you give the 200 rupee to government, government will return this 100 rupee to you. So overall, right, how much is the total collection of GST by the government here? The collection after giving the input tax credit is basically 200 rupees. Is it okay? After giving the input tax credit, right, it is 200 rupees. Now divide the 200 rupees. Divide the 200 rupees. 100 rupee will go to the central government, CGST, and another 100 rupee will go to the state government, that is SGST. And because this is intrastate, it is the state one where the production has happened, the taxes have been collected. It is that state which will collect the SGST component. Any difficulty in this? Sir, why in pre-GST government can't give 100 rupee back? My dear, are you listening to what I'm saying? Are you even listening? Did you attend yesterday's class? The central government has collected a tax. You are asking ITC from the state government. You tell me why they will give it to you. You tell me. Why will the state government give you an input tax credit when you have given the taxes to center? Do you think they will give it to you? In what world do you think that makes sense? Right? Absolutely no. Absolutely no. It doesn't make any sense. Right? In fact, we have discussed all of this yesterday as well. Okay. Now this is intrastate. Right? This is intrastate. Now, is it okay? GST input tax credit is provided. Input tax credit is provided. Under GST, the burden of taxation on the customer will be lower. Burden of taxation on the customer will be lower. What is happening to the market prices? Market price is also going down. Okay, done. Now this is intrastate. what will happen in the interstate? What will happen in the interstate? That is when the product will move from one state to another state. What will happen? Let's start. In the pre-GST, that is before GST, price is 1000 rupee. The central sales tax, imagine the product is moving from one state to another state. Okay, right? The central sales tax of 10% is applicable. So 1000 plus 100, 1100 rupees. So company B has purchased the product from A, but has paid how much here? 1100 rupees. And before going forward, yesterday we have discussed all of this. This 100 rupee tax will be given to state 1. You are in the state 2 now. You are in second state. You want to earn a profit of 1000 rupee. You will calculate the price as 2100 because second state will not give you the 100 rupee back. You are not registered in the state 1. So there is no way you can ask for state 1 to give the 100 rupee back. So you will count it as 1100. The market price, selling price will become 2100. 10% tax, right? 210 rupee. What is the final price? 2310 rupee. So intrastate cascading effect is there. The burden on the consumer is higher. Okay, burden on the consumer is higher. Come to GST now. Come to GST. Price is 1000, right? You will sell it to, right, company B. Imagine your company A, you will sell it to company B. So because this is interstate, is it okay? Because this is interstate, I will apply IGST, integrated GST. Of how much? Same, let's say 10%. So 100 rupee will be the IGST. This is going to government. Step 1, 100 rupee will go to government. I am company B. I have purchased the product. I have paid 1100 rupees. But in deciding the selling price, I will not include the 100 rupee because I know that 100 rupee input tax credit will be provided to me. So what I'll do? I will count the cost price as 1000. Right? Profit will be another 1000. Selling price will be 2000, 10% GST now because it is within the state 2. Understand this? Sir, in the step 1 you are writing IGST, in the second step you are writing GST. Is it okay? Because you are selling within the same state, I will write a GST. Okay. So 10% of 2000 will be 200. Final price that is paid by the customer will be 2200. So in the step 1, government has collected 100. Step 2, government has collected 200. I am the company B. I have collected 200 from the customer. I will give it to government. Government will return this 100 rupees to me. So again, how much GST has been collected by the government here? How much GST has been collected by the government? 200. Now how do I divide it? Equally into 2 parts. Equally into 2 parts. 100 will go to the center. 100 will go to state 2. Is it okay? 100 will go to the center. 100 will go to state 2. Why state 2? Why not state 1? Please go back to the basics of GST. GST is a destination based tax. GST is a destination based tax. Right? A center will get 100. Anyway, center will get 100. And what will happen to the state 2? They will get another 100 rupees because the product is consumed in the state 2. Okay, so this is how GST will be implemented. Now you need to simply observe same thing. Is there input tax credit? Is there input tax credit under GST? Yes. Right. Is the state 2 where consumption is happening, is the state 2 getting SGST? Yes. Destination based tax. Is there a cascading effect under GST? No, there is no cascading effect. Okay. Right. So this is basically idea of how GST will be implemented intra as well as inter. Now many of you are trying to find fault with this. So state 1 is losing, etc., etc. It means you did not even listen to what we have discussed yesterday. There is no point in discussing same thing again and again. Yesterday we have discussed all of it. Right? I told you based on only one example, do not jump to a conclusion state 1 is losing. But again, doesn't matter. You will keep on asking the same thing again and again. Okay, done. Can I go forward now? But in intrastate, center is still getting 100 rupees in both the example. How does it matter? Center will get money. Either way, center will get money, because which state will get SGST, that's basically destination. But don't you think either it is inter or intra, center will keep on getting that CGST component? What is the problem in that? What is the problem? Is your problem that center is getting money, or your problem is center is not getting money? Either way, center will get it. Either SGST, sorry, either it is a GST or IGST, center will get CGST component anyways. Okay, should we by heart this calculation? No. Should you by heart this calculation? No, please do not by heart it. Okay, let's go to the next one now. GST network. GST network. N means nothing but GST network. Okay, now what is this GST network? Now have a look at this. How many of you have gone to a shop and have seen GST registration number? Tell me, how many of you have been to a shop, restaurant, hotel, wherever, and they will simply display what is their GST registration number? Some of you will say, sir, what is shop? Some of you will basically ask me a question now, sir, what do you mean by shop? Right? Don't worry. You must be having certain bills with you. Open the bill and you will see that in the top, there is a GST registration number given. I hope you understand. Right? Either you have been to a shop, you have seen, or you have not been to a shop. Right? What is shop? I don't know, sir. Right? Hindi mein kya bolte hain? Dukan. Right? Don't worry about it. Even if you have not been to a shop, a bill will be lying somewhere in the home. Take the bill, open it and see there is a GST registration number. Now, do you think Government of India has time to give GST registration number to everyone in India? Think of it. Do you think it is the Government of India, that is Ministry of Finance, is sitting aram say they don't have any work, right? You go to Ministry of Finance, they will give you a registration number like this. No. So for this, what we have done is, under the GST, we have established a new authority. That is a GST network. GST network. And this authority will take care of all the back-end work of GST. I'll repeat it. It is this authority, GST network, which will provide all the supporting services, back-end work of GST. Sir, what do you mean by this? For example, I said, if you have listened to me carefully in the previous slide, I told you that in the step 1, government will collect 100 rupee. In the step 2, government will collect 200. And I said, you will give 100 rupee and you will also give 200 rupee. Then the government will return this 100 rupee to you. Idea of an input tax credit. But now the question arises, what is the mechanism here? How does it happen? I'll give a very simple example. Follow this. UPSC will not ask you. But I want to tell you what is basically the function of GST network. First one is, you are a supplier. You are a company. You are a manufacturer. You are a service provider. You should be registered under GST. Which is the authority where you will get the registration done? It is the GST network. It is the GST network. Second, you want to submit all of these documents to government. Sir, why should I submit the documents? Let me imagine you are a company. Okay, you're running a company A. You will purchase a raw material. You will purchase raw material. And you will pay a GST of 10 rupee. You will sell the product. You will collect a GST of 15 rupees. Now, simple. You will have to maintain all these receipts. Is it okay? You will have to maintain bills, receipts of all of this. Sir, why should I maintain? Otherwise, how will the government come to know how much input tax credit to provide to you? I will repeat it. You have purchased raw materials, you have paid GST, you have sold a product, you have collected GST. Now you should get ITC from the government. You tell me, if you do not have any record of this, if you do not have any document to prove how much taxes you have paid, how will the government provide input tax credit to you? So what you need to do is, you will have to keep bills of everything. Submit these bills, submit these receipts, then you will get the input tax credit. That is basically the function that is done by GST network. They should be able to find out who is paying how much ITC, whether this company is paying ITC or not. Are these companies avoiding taxes, evading taxes? Somebody has to analyze all the data. That is a taxpayer profile analysis, filing of the returns. Filing of returns means you will submit all the documents, registration of the taxpayers. All of this is done by GST network. And remember this, it is a non-profit organization. GST network is a non-profit organization. And the technicality of non-profit organization is, they'll say it is a Section 8 company. They'll simply say it is a Section 8 company. Under the Companies Act of 2013, it is registered as a Section 8 company. Now, many of you will simply say, sir, but no, some book says not Section 8, but they'll say Section 25 company. Please understand, before introducing Companies Act of 2013, we had one more Companies Act. Companies Act of 1956. Under the Companies Act of 1956, if you register as a non-profit organization, it was called as a Section 25 company. Is the logic okay? Right? Under Act of 1956, a Section 25. Under the Act of 2013, it is Section 8. So it is a Section 8 company. Okay? Right? It is a Section 8 company. Okay? And next point, GST network ownership is about to change. Right? It's a very old proposal as of now. Right? As of now, even now, right, I've checked the data, it is owned between the government as well as the private sector entities. What is the ownership now? 49% will be equally owned between the center and the state. I'll repeat, 49% of the GST network is equally owned between center and the state. Remaining 51% is owned by non-government agencies, non-government institutes, such as certain private sector banks. All of you heard of HDFC? HDFC has certain amount of ownership in the GST network. So that is the basic idea. But Government of India says we want to completely transfer the ownership to the government. Right now, non-government institutions are there, but we want to convert it completely under the government ownership. That is 50% will be owned by the center, remaining 50% will be owned by the states. Right? That is current affairs point regarding GST network. Next one, anti-profiteering. Idea of anti-profiteering. Let me give you a very simple example. Follow the explanation here. Do not mug up calculation. Follow the explanation. Imagine I'm a manufacturer of this bottle. The selling price is 100. Government of India right now, or GST Council right now, will impose a tax of, let's say, 18% on this. Will impose a tax of 18%, which is nothing but 18 rupee tax. What will be the MRP? What will be the price that you as a consumer will pay? 118 rupees. Agreed? Very simple example I'm taking. Price is 100. Government is imposing a tax of 18 rupee and you are paying 118 rupees. And this 18 rupee will go to the government. 9 rupee will go to central government, 9 rupee will go to the state government wherever the product is consumed. But what if I say government will reduce the tax from 18 rupees to 5 rupees? Think of it. What if the government will reduce the tax from 18 rupees to 5 rupees? Don't you think the market prices should also come down in the same proportion? Understand my statement here. If the government taxes will come down, let's say by 13 rupees, don't you think the market prices should also come down by 13 rupees? If it happens, what will be the market price? 105. And what is the selling price? 100. Now, just to make it much more clear, imagine this 100 rupee, I have derived it like this. Land, 10 rupee, labor, 20 rupee, capital, 30 rupee, and entrepreneurship, 40 rupee. Profit is 40 rupee. So when the selling price is 100, my profit is 40 rupees. Now this is example 1. This is example 1. Now rather than this happening, what if I tell you, you will come to my shop, I will tell you Government of India has reduced the GST, and as a result of this, I have reduced my market price from 118 rupees to 100 rupees. Think of it. Government of India has reduced the GST, right? You will also tell, sir, I've read in the newspaper, GST has come down. So I will say, earlier I sold the bottle at 118 rupees to you because government has reduced the GST from 18 rupees to 5 rupees. I also have reduced my market prices to 100 rupees. Now, simple question to all of you. Do you think you will get the complete benefit of tax reduction? Think of it. Just think of it. Right? I'll repeat the question here again. As a consumer, as a customer, you are getting, or are you getting complete benefit of tax reduction? Are you getting the complete benefit? Again, 2 of you are saying yes. 3. How? What is your calculation? Show it to me. Right? When the prices, understand this, when the tax rate has come down from 18 rupees to 5 rupees, understand this, not 100, 110. 110. Right? I hope you understand. 110. I said 110, but writing I've made a mistake. Right? 110. The taxes have come down. Right? My mistake. I'll correct it now. Okay, so some of you might have been misled by the number that is written on the slide. So earlier it was 118, now it has been brought down to 110. So my question remains the same. Do you think you are getting the complete benefit of tax rate reduction? Answer is no. Why? If I basically do the calculation, tax has come down from 18 rupees to 5 rupees. Your selling price and now will not be 100, it will be 105 rupees. It will be 105 rupees. Now, what do you think has changed? Don't you think the profit that is earned by the seller, has increased? Is it fair? Think of it. Is it fair? Don't you think the seller, that is me, whenever the government has reduced the taxation, should transfer the complete benefit to a consumer? But have I done it? I have not done it. Part of the benefit I have transferred. Remaining benefit, that is a lower tax, right, or lower tax rate applicable, part of that benefit I have taken. How? Higher profit. Higher profit. Right? So that is basically profiteering. That is basically profiteering. This activity is called as profiteering. How profit will increase? My dear, you tell me, has the labor prices changed? Did I tell you labor prices have changed? Tell me. Did I say that interest has changed? Did I say that? Right? Did I say that the cost of rent has changed? I have not said anything. Right? And it's a very simple CSAT calculation. Those who are asking me, sir, how, it is very, very difficult. Be very careful about your CSAT papers. Be very, very careful about your CSAT papers. You are not good with CSAT. I'll frankly tell you, you are not good with CSAT. I am saying, right, 118 rupees, the tax has been reduced by the government to 5 rupees. Earlier was 18 rupees, government has reduced it to 5 rupees. And some of you will simply say, sir, I will come to know. How will you come to know? On the bottle, MRP is written. I hope you understand. On the bottle, MRP is written. And how many of you seen the labels very correctly? Think of it. How many of you seen the labels very correctly? Do you think they will give you the breakup of pricing? Tell me which product will give you breakup of pricing. Go to the market today, purchase a pack of, let's say, any biscuit packet. Please look at the MRP. They will write it as 5 rupees. In the bracket, they will say inclusive of all taxes. Inclusive of all taxes. So you don't know how much is the tax, how much is the actual selling price. So I am saying government has reduced the taxes from 18 rupees to 5 rupees. Earlier the cost that you paid was 118 and now you will pay 110, which means you are paying 5 rupee taxes but the selling price is 105. If the selling price has changed from 100 to 105, don't you think the profit earned by the seller would have increased from 40 rupees to 45 because nothing else is changing? This is called as profiteering. This is called as profiteering, and this is my sincere suggestion to those people who repeatedly will ask me whenever I show calculation, sir, very difficult. Focus on your CSAT papers. Don't worry about economics calculation. Focus on your CSAT papers. Your CSAT is very, very weak, my dear. This is my sincere advice to you. CSAT will not help you become IAS, but definitely it is a qualifying paper. Right? It's a very important qualified paper. You should be good with calculations. Focus on that. Okay. So this is called as profiteering. Should the government allow this? Let me know. Should the government allow this? Right? Government has reduced the tax. You are not getting the benefit of the tax. The seller is making more profit. Right? This is called as profiteering. Government doesn't allow this. For this only, we have one more authority, National Anti-Profiteering Authority. We have one more authority called as National Anti-Profiteering Authority, NAA, National Anti-Profiteering Authority. Now, what is the role of National Anti-Profiteering Authority? Either they can take up the cases suo moto. All of you understand suo moto now? After polity have come. Don't say, sir, suo moto, I've heard it first time. Absolutely no. Right? The cases can be taken up suo moto, or as a customer, you can file a complaint. As a customer, you file a complaint saying that, see, these companies right, are involved in profiteering, right? Or the anti-profiteering authority automatically will take up the case. They will investigate. And if found that, right, if found that they are involved in profiteering, the authority will penalize them. They'll simply impose penalties. How much penalty? There is no uniform formula for this. From one case to another case, penalties will keep on changing. Point number one. But in extreme cases, the authority can cancel the certificate, that is the registration of a company. In extreme cases, they can simply cancel the registration of the company. Okay, that is anti-profiteering authority. Now let me go to the next point. There's a technical term here. There was a sunset clause of 2 years. Follow my explanation now. There was a sunset clause of 2 years. Now before I explain to you sunset clause, all of you have eaten a packet of biscuit, a bar of chocolate, you have drank a soft drinks, etc. Now, don't you think there is an expiry date for all the products? Let me know. Anything that you have purchased, right? Anything that you have purchased, let's say biscuits, chocolates, soft drinks, tea, coffee, fast food, etc. Don't you think there is an expiry date? The expiry date for an authority, this is a sunset clause. Simple. What is a sunset clause? Sunset clause means the authority will be working for specific number of years. That's it. After that, the provision will not be there. Automatically, the authority will close. Any difficulty in understanding sunset clause? Let me ask a very simple question. Imagine Government of India will set up one authority in 2023 with a sunset clause of 3 years. With a sunset clause of 3 years. Tell me in which year the authority has to shut down. 2026? Is the logic okay now? The term sunset clause is okay with all of you? Sunset clause means what is the expiry date for a provision? Simple. What's the expiry date? 3 years, 2 years, etc. So anti-profiting authority has a sunset clause of 2 years, which means it was established in 2017, is supposed to wind up in 2019, supposed to close in 2019. But again in 2019, the GST Council extended the sunset clause by 2 more years. From 2019 now, the authority is functioning extended till 2021. So in 2021, it should have been closed. Again, the GST Council extended it. Again, it has extended it. And it is expected in this year, we are going to close anti-profiting authority. We are going to simply close anti-profiting authority. Whatever cases are there with anti-profiting authority will be transferred to Competition Commission of India. Will be transferred to Competition Commission of India, CCI. Right? This is the current affairs regarding the National Anti-Profiting Authority. Please go through this. Okay. So this is the discussion regarding NAA. So what has been the performance of GST in the last 5 years? Do not have a heart attack. Please do not by heart the data from this slide. Right? Do not by heart the data from this slide. Right? So many graphs, so many numbers. Should I remember? No. Right? Just make observations. Point number 1. Has the GST collection increased over a period of time? I hope you understand. Just to make an observation and let me know. Has the GST revenue collection increased over a period of time? Right? You will generally observe and say, sir, you are wrong. You are wrong. In one of the years, revenue has taken a hit. But already you know what is the reason for it. I hope you understand. You know what is the reason for it, right? It's not a structural problem. It is not a problem with the GST, but rather because of pandemic, revenue collection has gone down. But what is the general observation? The general observation is from 1 year to next year, GST revenue collection has gone up. Point number 1. Point number 2. Even average monthly GST revenue collection also has increased. For example, a couple of weeks ago, in the newspaper, there was one article. The GST revenue collection for monthly, it is 1.5 lakh crore rupees. That's a very good number, by the way. So the GST revenue collection has increased. Monthly average revenue collection has improved. The number of taxpayers who are registered under GST has increased. The number of taxpayers who are registered under GST has increased. Now, right, focus on this. Imagine earlier there was a company, there was a manufacturer, very small manufacturer. There was a manufacturer who was not registered with the government. Now this manufacturer has come under the GST registration. I will call this as formalization. Any difficulty, please do let me know. I will refer to this process as formalization. What do you mean by formalization? While discussing the concept of GDP calculation, I told you this. Lot of the companies in India, lot of manufacturers, service providers, etc. are informal in nature. What do you mean by informal in nature? These are not covered under any law. Not covered in the sense these are not registered with the government. Now under GST, many of these manufacturers, service providers who are not registered earlier are getting GST registration. This is leading to formalization. Any problem here? This is leading to formalization. Now, can I say one of the advantages of GST is that it has increased formalization in India. And is it good? Of course, it is good. Right? Many of you will ask me, sir, what is the advantage? Why formalization is needed? Now tell me, don't you think government of India will come to know how many companies are manufacturing in India? how many service providers are there in India? And you will ask me one more question. Why are they getting registration? If they are not registered, you tell me how will they file their documents? Let me know if you have any other alternative mechanism. If they are not registered, it becomes very, very difficult for them. There is an alternative mechanism, but that's very difficult. Right? The idea is, if a company is supplying raw materials, they should submit the bills. Only then they will get the input tax credit. So if you're not registered, it becomes very difficult for you to get ITC. So that's the reason more and more manufacturers are becoming part of formalization because of GST. So these are certain very important achievements of the goods and services tax. But having said so, there are certain concerns. First one is compliance burden. Technical term, but let me explain it. Compliance. I'll ask a very simple question. Let's start with an example. Imagine you are a manufacturer. Okay, imagine you are a manufacturer. And because there is a COVID, Government of India has asked you, or let's say has directed you to install sanitizers in your manufacturing facility. They've asked you to install sanitizers. Now let me ask you a simple question. Because of this policy of the government, because of this guideline of the government, will your expenditure increase or not? Think of it. Because of this guideline of the Government of India, will your expenditure increase or not? Of course, yes. It's a very simple idea. It will increase. Now, I told you, under GST, whenever you purchase, you'll have to keep receipts. Whenever you sell, you'll have to generate receipts. And not just that, on month-by-month basis, on quarterly basis, you'll have to keep on filing all of these documents with the government. Now, how many of you think every company in India will have experts? Experts in the sense, the department which is in charge of this. How many of you think that every company has this department? Not everyone. In fact, lot of them do not know how to do this. Now imagine I'm one of those manufacturers. Sir, why do you say you don't know? My dear, I'm running a small manufacturing facility. Very, very small manufacturing facility. 2 people are working with me, but I'm supposed to file GST. Now tell me, will I start learning how to file, right? Will I become an expert in this? If even I want to do that, it will take time. And do I have so much amount of time as well? So what I will do, I will hire an expert. I'll simply hire an expert, or I will get the services from one more company. Now tell me, will it not increase the cost of, or will it not increase the expenditure of these companies? Is it okay? Is it not going to increase the expenses of these companies? That is compliance burden. Compliance simply means how much time and money you are going to spend in order to follow the guidelines of government. Is it okay? What is the compliance? How much time and money you are going to spend in order to follow the guidelines of the government. So with the introduction of GST on some of the companies, can I say compliance burden has increased? That is one problem. Second problem, multiple tax rates are there. We need to rationalize it. We need to rationalize the structure. We need to reduce the number of rates under the GST. Third one, revenue protection for the states. Revenue protection for the states. Now let me tell you a very important or interesting story here. I told you that compensation period was decided 5 years. Compensation period was decided to be 5 years. Why it was decided 5 years? Why not 7? Why not 10? The argument of the government was, in 5 years, GST will become very stable. I'll repeat it. In 5 years, GST will become very stable. It is going to promote production in the market. It is making easier to conduct business we will attract lot of investments, production is going to increase, contribute to GDP. Now when the GDP increases, automatically the GST collection will also increase. And when the collection will increase, why would we require compensation? I hope you understand. Right? Argument was in 5 years, it will become very stable. And when it will become very stable, GDP is increasing, collections under the GST for the states automatically will keep on increasing. So why would we require compensation for a longer period? No, it is not needed. Let's keep it only for 5 years. Now, do you think GST, right, or under GST, every state is getting good amount of revenue? Think of it. Just think of it. Do you think under GST, every state government is earning good amount of revenue? No. In fact, I'll quote a RBI report here. RBI published a report in the month of January. Right? They published a report in the month of January. And as per RBI, once the GST compensation which has been withdrawn now, many of the states will suffer. Right? Suffer in the sense, they do not have a basic, right, let's say support now. They do not have this kind of a compensation support. Okay, so revenue protection is one more concern here. Next one, there are certain goods which are exempted. We will have to bring all of them under GST. And there are certain goods or services on which we do not have GST, we should announce GST. Why? It doesn't make any sense to have GST and parallelly other indirect taxes are implemented, because it will defeat the whole purpose of GST. What is the purpose of GST? One nation, one indirect tax. Are we having only one indirect tax today? Absolutely no. Many of the goods are exempted, and many of the goods on which GST is right already there, it is yet to be announced. So there is no one nation, one indirect tax. We should move towards it. But having said so, right, what should be the takeaway from your side? What should you decide? Looking at all of this, you should not decide, sir, GST is very bad, let's withdraw it. Right? For example, many of the politicians, right, many of the politicians say GST is a Gabbar Singh tax. Don't write all of this in the exam. Be very, very rational. Be very, very rational. What is your argument? GST is a very important tax reform. There is no doubt regarding it. But are there problems with the current GST structure? Of course, yes, there are problems. I'll give an example. Look at the problem here. When we introduced GST, we had different rates of GST. Even today we have it. 5, 12, 18 and 28%. I'll give a very important case study, not important for UPSC, but to just tell you what is the difficulty nature here. All of you heard and eaten barfi? Let me know. All of you have eaten this barfi, a delicacy. I'm not talking about a movie, a delicacy, right? Barfi, sweet. Now, when the GST was introduced, this was a very peculiar situation. Very, very peculiar situation. What was the peculiar nature of it? Different barfis were imposed with different GST rates. I hope you understand. Different barfis were imposed with different GST rate. Sir, what do you mean by different barfis? One is a plain barfi. I hope you understand. One is a plain barfi. Another one is a barfi with chocolate layer on it. Third one is a barfi with a dry fruit sitting on it. Right? And one more is a kaju barfi. So have a look at this. Right? Have a look at this. Different barfi products, different GST rates. But don't you think this is very, very complicated structure? I hope you understand. This is a very, very complicated structure. We should not have so much amount of, right, complications. So that's the reason I said GST is a very good reform. No doubt regarding that. Right? But please understand there are certain issues with the GST structure. We should address it. And please write this point as well. This point also you mention it. There is no other country in the world which has implemented GST in such a large scale. Please remember this point. There is no other country in the world which has implemented GST on such a large scale. And we do not have a model for this also. Right? I hope you understand. We do not have a model for this. Model in the sense, there is no other country in the world which has implemented GST like India has implemented. Right? How many of you think there is any other country which has the same number of companies that India has? Same level of informality that India has? Same difficulty in terms of distribution between the taxes, power between center and state like any other country? No, India is a special case here. So we do not have a model. We do not have a model to simply copy and paste. That is the precise reason. Of course, there are going to be issues with the GST structure. But the solution is not to withdraw GST, but to restructure GST, correct the issues in the GST. Please write the answer like this. Please write the answer like this. Right? Now, you have come from polity lectures. Can I give you an example? In making of the constitution, again, don't write this in GST. In making of the constitution, did we not take certain features from country A, B, C, D? Right? The argument of bag of borrowings. Bag of borrowings. Again, not related to GST. But tell me, could we have done the same thing in the context of GST? Very difficult. Very, very difficult, because there is no other structure like we have, economic structure like we have in India. No other country has it. Some of you might simply compare it to one more country where informality is very high. But look at the size of the Indian economy with that economy. So that's the reason, right? There are problems. We are going to address it. We are going to fix those problems. Right? That should be your approach to the kind of questions. Okay? Now, next concept. This is the end of the GST. This is basically the end of GST. Right? So again, I'll repeat it. GST is very, very important. GST, trust me when I say this, very, very important. In the last 5 years, only in the last year, question has not come in the prelims on GST. But before that, if you see, continuously questions have come in the mains as well as prelims on the concept of GST itself. Okay. Next, other concepts related to taxation. Other concepts related to taxation. Now, what are the other concepts? Follow these very carefully. 1, 2, 3, and 4. Tax buoyancy, tax elasticity, tax expenditure, and tax to GDP ratio. Let me start with number 4. Tax to GDP ratio. What is this tax to GDP ratio? It's a ratio of the amount of taxes collected divided by value of GDP of a country. I'll repeat it. Right? The definition is very simple here. What is a tax to GDP ratio? It's a ratio of the amount of taxes collected by the GDP of a country. Let me give a very simple example here. Imagine GDP of a country. Right? Imagine GDP of a country is 100 crore rupees, and the tax collected by the country, rather than writing below, I'll write it above so that easier calculation can be done. Tax collected by the country is 10 crore rupees. What is the tax to GDP ratio here? Can I simply say tax to GDP ratio is 10%. Tax to GDP ratio is 10%. Any difficulty? It's a very simple calculation. Right? The value of taxes collected divided by value of GDP of a country. Tax to GDP ratio. Now let me ask you a question. Think of it. Think of it. Should the tax to GDP ratio of a country be higher or lower? What would you prefer? A low tax to GDP ratio or a higher tax to GDP ratio? Please think of it carefully. Think of it. Once you understand it, you will remember it throughout the life. You should prefer a higher tax to GDP ratio. Some of you are saying lower. My dear, no. No. You should prefer a higher tax to GDP ratio. Why? With changes in the GDP, if your GDP is 100 crore rupees, What does it mean? Market prices of final goods and services in the country is worth 100 crore rupees. Don't you think the amount of taxes that you're collecting should also be higher? Think of it. Right? You want to collect lower taxes in the market or sufficient taxes to take care of your expenses. Right? So one point is, obviously amount of taxes you are collecting should be higher. That is point number one. Second point, let me connect it to the finances of the government. The government has to spend money. All of you will agree? Government will have to incur lot of expenditure. Now tell me, out of this all of the expenditure, what would you prefer? More and more tax money to be used or not? Think of it. Right? Government is spending a lot of money. That's a fact, by the way. Don't you want government to collect more and more amount of taxes so that they will take care of the expenses? Right? For example, India. India spends more than 30 lakh crore rupees annually. More than 30 lakh crore rupees. But what if out of 30 lakh crore rupees, government is able to collect only 1 lakh crore rupees from taxes? What if government collects only 1 lakh crore rupees, right, from taxes, and remaining 29 lakh crore is from other sources? Would you prefer this? Would you prefer this? Absolutely no. You should not agree to this. Why? It simply means borrowings of the government are very, very high. Borrowings of the government are very, very high. The debt of the government is very high. Is it good for a country? Absolutely no. So you already know that government needs to incur a lot of expenditure. So in that expenditure requirement, more the tax to GDP ratio, it simply means that tax receipts, tax income collected by the government is very high, which they are using for expenditure purposes. Which also means that the borrowings of the government can be controlled now. Government can control its borrowings. Otherwise, it's very, very difficult. Can I connect it to current affairs? You tell me in the pandemic, what happened? You already know the reason. Right? In pandemic, what would happen? Do you think government will be able to collect more taxes, either direct or indirect? Do you think government will be able to collect more taxes? No. Tax receipts have gone down. With lower taxes, what has happened to borrowing of the government? Borrowing of the government has gone up. And when the government borrows more and more, the repayment burden on the government automatically will go up. That is a problem. That's a problem. Right? So that's the reason we say tax to GDP ratio should be higher. Right? A tax to GDP ratio should be higher. What about India? Generally, they'll say tax to GDP ratio of India is somewhere around 17%. Very, very low. And do not by heart it. Next year when you're writing the exam, in the economic survey or the budget, they will give you the data. Please remember that. Don't remember this data. This is outdated by the time you write exam. Right? So tax to GDP ratio is somewhere around 17%, but compared to other countries, it is very low. Compared to other countries, it is very low. For example, there is a group of countries, OECD group of countries. In case of OECD group of countries, the tax to GDP ratio is somewhere around 33 to 35%. It is somewhere around 33 to 35%. Right? So there is a need for us to increase our tax to GDP ratio. Now, some of you will basically say, and again, you will apply CSAT now. Right? Where you should apply, you will not apply, you will apply CSAT now. Sir, you say that higher tax to GDP ratio is preferable. But what if there is a recession in the economy? What if there is a recession in the economy? GDP automatically will go down, denominator reduces, so the GDP ratio, that is tax to GDP ratio, will go up. Is it good? My dear, you tell me, if there is a recession in the economy, do you think the taxes collected will remain same? How? And you tell me how does that make sense? So do not simply apply CSAT and make your own assumptions here. Both are connected to each other. The taxes collected will have a relevance over the GDP numbers. Right? Higher the GDP, we expect higher to be the taxes collected. So if the GDP itself will fall, numerator will not remain same, it will also fall. Right? That is the argument. Okay, done. So first one is a tax to GDP ratio. Tax to GDP ratio. Let me go to number one here. Tax buoyancy. Tax buoyancy. What is this idea for tax buoyancy? It measures a growth rate in tax revenue collection as a response to growth rate in GDP. I have simply written growth rate here. What is the growth rate? Of course, if you simply mention growth rate, it is GDP growth rate. Let me explain it. Right? It is measuring, and many of you keep on asking full forms. Did we not discuss the full form of OECD yesterday? This is actually surprising to me. Did I not tell you the full form of OECD yesterday? Right? And the argument is simple. It simply means you are not repeating. You are simply not revising. Right? That's a cause of concern for you, by the way. Cause of concern for you. You should revise it. Okay, done. So let me go to the tax buoyancy. It measures growth rate in the tax revenue collection as a response to growth rate in GDP. Right? So if there is a change in the GDP, okay, if there is a change in the GDP, as a result of this, what is the change in the taxes collected? What is the change in the taxes collected? That measurement is called as a tax buoyancy. Now, focus here. Right, focus here. Imagine GDP of a country is 100 crore rupees. Right, 100 crore. It will increase to 110 crores. Right, 100 crores to 110 crores. What is the growth rate in the country? What is the growth rate in the country? 10%. And in the same time period, the taxes collection will also increase from 10 crore to, let's say, right, I'll write a simple number here, let's say 13 crore rupees. During the same time period, taxes will also increase from 10 crore to 13 crore rupees. What is the growth rate? And by the way, all of you will agree, with higher GDP, you should be able to collect higher taxes. Anybody who says no, sir, there should be opposite impact. Right? Higher GDP means we should collect lower taxes. Amount of taxes collected should go down to, let's say, 7 crore rupees. Is there anyone? Please do let me know. Okay. So there is a rise in the taxes collection also. That change is 30%. So what is the tax buoyancy here? What is the tax buoyancy? Tax buoyancy simply is 30% divided by 10%. 30% divided by 10%. Okay, so cancel. Tax buoyancy is 3. But how do you read it? What do you understand? If I said tax buoyancy is 3, what do you understand? It simply means if the GDP changes by 1%, if the GDP changes by 1%, the taxes that you have collected is changing by 3%. I'll repeat it. If the GDP changes by 1%, the amount of taxes that you're collecting changes by 3%. Now, can I conclude this concept by saying that the tax buoyancy, higher the number, it is good. I'll repeat it. Tax buoyancy, higher the number, it is good for a country. And now can I say that? From 1 year to next year, if the tax buoyancy is very high, tax to GDP ratio will increase. Let me know. I'll repeat the statement here. From 1 year to next year, if the tax buoyancy is very, very high, tax to GDP ratio will also start increasing. Is the logic okay with all of you? Is the logic okay with all of you? These kind of questions will be asked in prelims. These are being asked in prelims. Please be very, very careful. Please be very careful. And then can I also say that on the other hand, if the tax buoyancy is less than 1, it simply means taxes collected are not sufficient. Let me know. Right? If the tax buoyancy is less than 1, it simply means there is an inefficiency. There's a problem with the tax collection. We should do something about it. Because the tax buoyancy less than 1 simply means what? Our GDP is growing at a faster pace compared to our tax collection. How is that possible? Right? It simply means people are avoiding taxes. People are evading taxes. Right? So there's a problem, you will have to address it. That's the reason tax buoyancy numbers, whenever the budget is announced, government will tell you what is the tax buoyancy in the last 1 year. What is preferable is higher the buoyancy, higher the number of buoyancy, it is preferable. Done? So these are two very important concepts that I wanted to discuss before we take a break. Two more are there: tax elasticity and tax expenditure. I'll take it up after the break. Okay. Now, any questions? Please do ask me now. Sir, your teaching methodology is not good. Great. Thanks for your feedback. But focus on the discussion, not on my teaching. Focus on the discussion, my dear. Right? Don't try to troll the faculties. It doesn't make any difference to us. Okay? Focus. Okay. Why gold has been kept at 3%? Right? Please understand this. Historically, in case of India, okay, historically in case of India, we have kept gold at a very, very low rate. But please understand this, it doesn't mean that gold does not attract any other taxes. Whenever gold, in fact, gold is imported into India, basically we impose customs duties. There's already a customs duty. But when it is being sold in the market, generally government says that this is consumed by the poor people, middle house income households. That's the reason we generally, we generally keep gold at a lower rate of taxation. Okay. What is a tax buoyancy? Right. One question is, what is tax buoyancy? I'll explain it. There is one more statement. Sir, we do not have superpowers to remember, what you have discussed yesterday. My dear, that's your duty, by the way. Don't you think that's your duty? Again, I'm not losing anything. Trust me when I say this. I do not lose anything. If you don't revise, I will not be harmed. There is absolutely no connection between your preparation and my, let's say health. It's not that if you don't revise, I'll become sick. No inversely related, no directly related as well. But my argument is, if you're attending the classes, you already know that economics is slightly technical and you know that economics is required for UPSC. You know that. Then be ready to prepare. Be ready to prepare, right? Please don't do this. Okay. Tax buoyancy. What is this tax buoyancy? Have a look at this. Tax buoyancy simply measures what is the change in the growth rate with changes in the taxes collection. Is it okay? What is, Are Baba, buoyancy? Now you want me to teach buoyancy also. Sir, what is buoyancy? How many of you remember Archimedes principle? Let me check. How many of you remember Archimedes principle? I will not teach Archimedes principle, by the way. Right? Have you come across the term buoyancy there? The ship will float in the sea, etc., etc. Right? You should know all of this because you have learned it. Right? Class 11th, I believe, in physics. Right? Again, buoyancy means floating. Right? So come to the economics now. Come to the economics. So tax buoyancy simply means with the changes in the GDP, from 1 year to next year, GDP will change, either go up, go down, etc. With the changes in the GDP, how much is the change in the taxes collection? How much is the change in the taxes collection? Right? That measurement is called as tax buoyancy. I've given you a simple calculation here. From 1 year to next year, GDP has increased by 10%. During the same time period, the taxes collected also has increased by 30%, which means the rate of change in the taxes collection is much better compared to changes in the GDP. That's the reason I said tax buoyancy should be more. The rate of tax buoyancy should be more. Okay, done? So this is basically the idea for tax buoyancy. Okay. Any other difficulty? Isn't GST taking some sort of power from the states? As of now, compensation has been stopped. No. Please understand, don't write they are taking away the power. Those are the arguments of the states. Don't make it political. Focus only on economics. Focus only on economics. Don't make it political. Argument is simple here. The states agreed for GST. I hope you understand. States agreed with the GST. And just to make states agreeable to the model of GST, central government has provided compensation to them. Right? I hope you understand. Nobody in 2016 or 2015 knew there would be pandemic. Anybody who is here who says, sir, I knew it, please do let me know. I will forward your email ID to the government of India. Right? So argument is nobody knew that, right? In 2020, 2021, there is going to be a pandemic. Revenues of the states are going to get affected. Revenues of the center is going to affected. States will ask for extension. Nobody knew that. So when we made the law, we decided that we will provide compensation for 5 years. Now the states want extension of it. Center says no, I will not provide. Because I promised only 5 years, I will give it for only 5 years. There are two people who are saying, sir, I knew that there would be a pandemic after 5 years. Please talk to finance minister. Please talk to finance minister and tell the finance minister whether there is going to be a recession in the coming months or not. Right? You will be doing greatest work to the Indian economy. Please talk to the finance minister now. Okay. And by the way, if you knew the future, right, I'm pretty sure you already know whether you're going to become IS officer or not. Right? Okay. So done. So let's take a pause now. Let's take a pause. So let me start the session again at 8:07 a.m. 8:07 a.m. Let me restart the session at 8:07 a.m. Okay, welcome back. Am I audible? Am I audible? Let's start. Let me know, am I audible? Okay, let's start. So, tax to GDP ratio and tax buoyancy. Okay, we have discussed two concepts. Let me go to the third one now. That is number 2 in this slide. Tax elasticity. Now, follow the discussion carefully. Do not be confused. Follow the discussion. Right, let's say you have collected a tax of 10 rupee now. I'll start with a simple example. Follow the discussion. You have collected a tax of 10 rupee. Now there are two ways you can increase the tax of 10 rupee to 20 rupees. The amount of taxes collected right now is how much? 10 rupee. And let's say the product price is, let's say 100, right? And 10% is the tax rate. So 100 rupee, 10% of it is 10 rupee. You have collected tax of 10 rupee. Now there are two ways through which you can increase it to 20 rupees. One, example 1, you will increase the tax rate from 10% to 20%. Is it okay? You will increase the tax rate from 10% to 20%. Now tell me, when the tax is 20%, how much tax you will collect? How much tax you will collect? You will be collecting 20 rupees. That is example 1. And example 2. In example 2, rather than selling only one product, you will now sell one more product. I'm taking simple example of GST, by the way. I'm taking an example of GST. Rather than selling only one product worth 100, now you will sell two products. So total two products means how much? 200 rupees. And 10% of 200 will be how much? 20 rupees. Is there any difficulty? Any difficulty? So what is the basic idea here? The amount of taxes that you can collect, right, can change. Tax at 10% only. The amount of taxes that you can collect can change for two reasons. One, you can change the tax rate, collect more taxes, or you can sell more and collect more taxes. Now, don't you think in the second case, right, in the example 2, it simply means GDP is changing. Let me know. In the example 2, GDP is changing, right? Yes or no? Please do let me know. Right? In the example 2, you are selling two products. You are simply selling two products, as a result of which the tax collection has increased. Now, can I refer to this as a concept related to tax buoyancy? Let me know. Can I basically say this is a concept related to tax buoyancy? That is, GDP is changing, taxes collected is also changing. But in this case, the taxes are changing. The tax collected are changing, but it is not because of changes in the GDP. It is not because GDP is changing. It is because tax rate is changing. Because the tax rate is changing. So have a look at the second one here. Have a look at the second one, tax elasticity. What is this tax elasticity? It will measure the growth rate in the tax revenue collection as a response to changes in the tax rate. Is it okay? What is tax elasticity? You are changing the tax rate. As a result of this, how much is your tax revenue collection changing? In this case, example 1 will be basically related to tax elasticity, and example 2 is related to concept of tax buoyancy. So the amount of taxes that you can collect can change. They change, of course. But what is the reason behind it? One reason is because you have increased the taxes. You have changed the taxes, hence the tax collection has changed. Second is, you have not changed the tax rate. You still have the same tax rate, but right, because of a higher GDP, now you are able to collect more taxes. That is called as a tax buoyancy. This is called as a tax elasticity. Right, so tax elasticity, tax buoyancy, and tax expenditure. And the fourth one is tax expenditure. Okay, now have a look at this. What is tax expenditure? If I were to simply ask you, tell me what is a tax expenditure, most of you will simply say, like we have been taught in your high school, right, colleges, university, etc. Tax expenditure automatically will start making the definition in your mind. It is the expenditure which is incurred by the government to collect taxes. I'm pretty sure most of you would think like this only, because that is how we have been programmed to do. Right? Tax expenditure means it is the expenditure which is incurred by the government to collect taxes. Is it tax expenditure? No. That's the reason UPSC tends to ask these kind of questions. I hope you understand. That's the reason UPSC will tend to ask these kind of questions. What is a tax expenditure now? Let me start with a simple example. Simple example. And don't worry about the policy here. Don't worry about policy. Yesterday we have discussed concept of special economic zones. I have mentioned. I have not discussed the complete policy. Later we will discuss. Promise we will discuss later. But what is the one of the feature? What is one of the feature that I asked you to focus on SEZ? You will be, for 5 years, you will be provided 100% tax exemption. For 5 years, 100% tax exemption will be provided. And what is this tax exemption? Corporate taxes. Corporate taxes. Right? Imagine, understand this carefully. I'll give you 2 examples here. Example 1, example 2. Imagine you own a company. That company is set up in special economic zone. It is established in a special economic zone. And the company earns a profit of 100 crore rupees in the first year. Company earns a profit of 100 crore rupees in the first year. Now, simple question to you, how much taxes will be collected by the government on this profit? I'd follow the discussion. How much taxes will be collected by the government from this company? 0 rupees. All of you will agree? 0 rupees. Why? That is the policy. That's a policy. But rather than being in the special economic zone, what if you are there outside SEZ? You're not in the SEZ. You're outside SEZ, domestic tariff area. Same number, you have made a profit of 100 crore rupees. Government will impose a tax of 30% on this and will collect 30 crore rupees. Will collect 30 crore rupees. Now understand the issue here. Understand the issue. Can I say that because of a government policy, government is not able to collect 30 crore rupee corporate taxes? I'll repeat the statement. I will simply repeat the statement. Because the government has a policy here, because of this government policy, government is not able to collect 30 crore rupee taxes. Any difficulty in understanding this statement? Sir, why? Why are they not able to collect? Because government has a policy of special economic zone, they are giving you an exemption. And because there is an exemption, government could have easily collected 30 crore rupees from you, but they are not able to collect it. This amount of tax revenue which is lost by the government, I'm using a specific term here, this amount of a tax money which is not collected by the government is called as tax expenditure. Any difficulty here? Please do let me know right now. The amount of a tax revenue that the government is not able to collect. Why is the government not able to collect? Because government is giving you certain exemptions. Government is giving you certain deductions. As a result of this, this amount will not be collected by the government. This is called as tax expenditure. Right? This is referred to as a tax expenditure. Lot of rebates are provided. Lot of deductions are provided. Lot of exemptions are provided by the government, as a result of which certain amount of tax revenue will not be collected. That is called as tax expenditure. Now, understand the next point here. Thus, SEZ policy is not the only policy where government will provide you tax exemption. I hope you understand my point now. right? SEZ policy is not the only policy where you enjoy tax exemption. There is a Startup India. All of you heard of this? Startup India policy. There are many such policies. We'll discuss that policy later. We'll discuss SEZ, we'll discuss NIMZ, we'll discuss a Startup India, we'll discuss a Make in India, etc., etc., etc. All of them we'll discuss later. But argument is simple. Because of all such policies of the government will not be able to collect certain amount of revenue that is called as tax expenditure. Okay, do not be confused with the term tax expenditure. Done? So these are the four concepts. Now, what are the issues in the taxation system? What are the problems in the taxation system? One, there is a huge amount of loss of revenues incurred by the government. Sir, why does the government incur loss of revenues? There is a lot of tax evasion done in India, lot of tax avoidance also done in India. Okay, lot of tax evasion, lot of tax avoidance. Did we discuss tax avoidance in India yesterday? Let me know. Right? Did we discuss tax avoidance in India yesterday? Of course, yes. Right? We have discussed the concept of a GAR, minimum alternate tax, etc., etc. What are the taxpayers trying to do there? They are trying to avoid taxes. So whenever the companies or let's say taxpayers will evade taxes. Now some of you will ask me, sir, give me example of evasion. There are many people in case of India, taxpayers who do not report right income to the government. I hope you understand my point here. There are many taxpayers in India who will not report the right income to the government. And what are they doing by not reporting the right income? Tax evasion. Can I give you one common example? I'm pretty sure many of you will agree with my example now. You will see that many people, whenever they have given the house on a rent, they will collect the rent in cash. Let me know if you disagree with me. Many people in India who have houses will give the house on rent. And whenever it is a question of receiving the rent, they prefer payment in cash. Why do you think so? I hope you understand. Why do you think so? Right? Reason is, if it is given in the cash, there is no paper trail. There is absolutely no paper trail. Right? Imagine, I'll give a very simple example. Imagine, right? I'm the house owner. Imagine, by the way, I'm a house owner. You are the tenant. I will ask you 50,000 rupees rent, but in cash. You will give me cash. Now, income tax officials, how will they come to know how much rent I have earned? Is it not tax evasion? Let me know. Is it not tax evasion? Of course, yes. There are many government doctors who are supposed to work only in the government hospitals, but they will have their private practice, despite government giving them the allowance for it. Government, some of the part of the salary is the allowance. Because you are not practicing outside, I will give you allowance. Government does that. But don't you think even after that, they will have their own private practice? And do you think they will go and report it to government? How many of you think they will go to the income tax officials and they will say, right, this is how much I've earned through private practice? If you do that, government will take action against you. Government will take action against you. You are not supposed to have a private practice in the first place. So is it not tax evasion? So understand the logic here. Lot of taxpayers avoid taxes, evade taxes. And as a result of this, the tax revenue of the government will be affected. First problem. Second, most of the economy is informal in India. I hope you understand. Most of the economy in case of India is informal. Informal means what? It is not registered under any of the laws of the government. For example, when I gave a break, some of you would have gone outside to have a cup of tea. Right? Or when I give the, right, let's say when I finish the class, you will go outside, have food on roadside. Don't you think there are a lot of these kinds of service providers or let's say goods providers who do not have registration? And when they do not have the registration, government will not be able to know how many people are actually providing the services. Forget about collection of taxes. That is basically informal economy affecting the amount of tax revenue collection for the government. Third one, government provides a lot of tax exemptions also. Just now we have discussed, right, under Make in India, under Startup India, right, under SEZ, government provides a lot of exemptions to the corporates. Now, don't you think if there is a very high tax expenditure, it also means government tax revenues would be affected? I'll repeat the statement. I'll repeat the statement here, right? If the tax expenditure is very, very high, it simply means government tax revenues are getting affected. Anybody disagrees with me? Please do let me know. And fifth one, there are a lot of issues related to the GST structure in India. We need to address the issues related to GST structure. So these are some of the issues that I've listed which are affecting the tax policies of the government. Okay, you will have to address these kind of issues. Okay, can I go to the next one here? In case of SEZ, it is done to promote growth. Of course, yes. I'll tell you the issue later. Please don't worry. Please do not be worried. Right? Some of you are saying, but sir, SEZ, right? Then why is the government implementing the policy? Simple, my dear. The objective of the government is not to collect taxes. I hope you understand. But I'm making a critical evaluation here. Sir, why is the government of India announcing SEZ policy then? It is to promote investment. It is to promote employment generation. It is to promote exports from India. That is the precise reason why government has many of these policies. But one way to attract the investment is tax exemption. I hope you understand. One way to attract investment is a tax exemption. Okay, that is a problem, but the objectives are completely different. Okay, now, sir, what is impermissible avoidance agreement? Impermissible avoidance agreements are those arrangements, I repeat, those arrangements which do not have any commercial requirement. I hope you understand. Impermissible avoidance agreements are those arrangements between companies which do not have any commercial requirement. But these are done in order to avoid taxes. In order to avoid taxes. Okay? Done. So what are the reforms which have been undertaken by the government now? Right? What are the reforms, right, which have been undertaken by the government? Now, can Swanidhi be formalization of street vendors? Yes. Right? We are getting the data under Swanidhi from a lot of these street vendors now. Okay. Now come to this. One more reform I wanted to discuss is Government of India implemented something by the name of transparent taxation, honoring the honest. I'll tell stories under this. Don't remember stories, understand the concept here. Government has implemented transparent taxation, honoring the honest. This was implemented during the time of pandemic, that is 2020. Under this, there are three very important pillars. One is a faceless assessment. Second one is a faceless appeal. And the third one is a taxpayer charter. Let me explain each one by one. Now, what is this idea of a faceless assessment? Follow this carefully. Imagine I'm a taxpayer. Okay, I'm a taxpayer. I have earned income of 20 lakh rupees this year. And I'm paying, let's say, 2 lakh rupee taxes to the government. And you are the tax official. Right? You will want to look at my documents. You want to, right, get into the details of how much money I've earned, where all I've invested, why I'm paying, let's say, 2 lakh rupees to the government in the form of taxes. Agreed? Right? You should know this. You should know that you will get all the details in the document. Now, how will you get those documents? How will you come to know how much income I've earned? How will you come to know? Right? There is no single source for you. Many of you simply say, sir, let's look at their bank account. But do you think only the bank account will give you all the sources of income? Think of it. Right? Many of you will tell me, sir, let's look at their bank account. Great. Look at their bank account. How many bank accounts they have? Will you have that all that information? And what if lot of transactions are done by this person collecting cash? In that case, what will you do? So have a look at this, right? There is a process which has been put in place. That is, I will submit all of the documents to you and I'll pay the taxes as per those documents. This is called as filing of income tax returns. All of you understand the term now? Any difficulty? This process where I will submit all the documents to you and right, I will pay the income tax to the government. This is referred to as filing of income tax returns. Now, simple question to you, is there a scope of corruption in the system here? Let me know. Is there a scope of corruption in the system? That is yes. By the way, it is there. Some of you are saying no, it is there. What is the scope of corruption? Imagine rather than earning 20 lakh rupees, I've earned actually 50 lakh rupees. I will give you the documents. Along with the documents, I'll give you 5 lakh rupees. And you will simply go through the documents, say everything is correct. Right? Everything is correct. Nothing wrong with the documents, everything is correct. But if you do that, government will be losing lot of tax revenues. I hope you understand. Government will be losing lot of tax revenues. Sir, is this the only example? Of course no. What if I'm a company? I will submit the documents involving fake documents, fake bills, fake invoices I will submit to you. And I'll also give you certain amount of money. Right? Now you will accept the bribe. Again, hypothetically. Don't say, sir, how dare you accuse me? Hypothetically. And you will approve all the documents. Who is losing here? The government of India is losing. This is one possibility. Second possibility, right? Can I also say the taxpayers going to the tax officials or the tax office submitting the documents, there could be certain harassment of the taxpayers? Let me know. There could be certain harassment or there could be inconvenience caused to the taxpayer. That is, you have taken your tax documents. In fact, it used to happen earlier. You have taken the documents, you have gone to the officials. Official is in a meeting. Official says he is busy, come after 1 hour, right, etc., etc. So argument is human interference is very high. Come to that point. In fact, I've written here, human interference is very high. We want to address it. So what we will do now? Let's make it faceless. Have a look at this. Let's make it faceless. Sir, what do you mean by faceless? Simple. I will submit digital copies. Everything will be done online now. What is the advantage of having an online system? I will submit the document. I do not have to go to the tax officers. I don't have to go to the office. I will sit in my home or I'll go to the bank, pay the taxes, take the documents, submit everything online. That is point number 1. Point number 2, follow this point carefully. Slightly technical, follow this carefully. Now, all of you know what is my name. I'm not asking, right? All of you know what is my name. I will send a message to you. This is my PAN number. This is my name. My documents will come to you. Please approve it. Right? Many of you will look at it and say, okay, sir, your documents have come. Right? This is my bank account. You will send, right, the reverse message to me. So these transactions can happen. Now, what if I say, I will submit the documents online. Now these documents will be sent to you, but the identification will be masked. Identification of the taxpayer is masked. Masked means what? Whose tax documents these are? This is hidden. Possible? Of course, yes, it is possible. Right? The identification is masked. Now, do you know which are my documents? Tell me. You are given, let's say, 10 documents to look into. right? The tax official has been given 10 documents. You are supposed to look at all the 10 documents. Can you find out which is actually my document out of it? Answer is no. Now have a look at this. That's the reason. The objective of all these, right, these processes is to bring in transparency in the system, to reduce human interface, to increase efficiency as well as accountability of the taxation system. I hope you understand. This is the whole idea of faceless assessment. I hope you understand this. This is basically the idea of faceless assessment. Sir, if identity is must, how do they collect taxes? My dear, you have already paid the taxes. Understand this. I don't know how many of you actually pay the income taxes. I don't know. But this is how it is done, and this is not needed for civil services. You already have paid income taxes, but the proof you have submitted in the form of documents. That is how the system works. That is how the system actually works. Okay. Now this is faceless assessment, meaning what? The documents are submitted online. These through a centralized system. Have a look at this. These through a centralized system, National Faceless Assessment Center, will be sent to the tax officials to look into. Assessment means evaluation, right? They will evaluate your documents and return the documents to the National Faceless Assessment Center. Okay, so this is a faceless assessment. Second one, right, a faceless appeal. What is the idea of a faceless appeal? Let me continue with the same example. I have submitted documents to you and I have paid 2 lakh rupee income tax. But you have gone through the document and you have found that one of the incomes I have categorized it wrongly. I have taken it as a part of deduction. There is no deduction allowed on it. Or I have claimed a higher deduction. So much deduction is not allowed to you. So what you will do? You will basically demand more income taxes from me. All of you will agree? You will demand more income taxes. You will send a notice to me saying that, sir, you have paid 2 lakh rupee income tax, but no, you are supposed to pay 3 lakh rupee income tax. You will send a notice to me. Earlier, physical notices were actually sent to the taxpayers. Now what you will do? You will have to go to the income tax office, take all your documents and give an explanation to them. Explain to them why 2 lakh rupees is the correct income tax, not 3 lakh rupees. Give an explanation. Don't you think this process is again cumbersome process? Right? There could be harassment of the taxpayers. There could be corruption also in the system. Right? Now what government says is, let's do this also online. Let's do this process also online. How? When you file the income taxes through the centralized system, these documents are allocated to taxpayers. Now the tax officials. Now the tax officials will evaluate the document, submit whether there is a higher tax demand or not, again back to the central authority. Now it is the central authority which will send a tax notice to me. It's not the taxpayer who is identifying who has to pay how much. Centralized authority will send a notice to me. And they will basically send online notices now. Gone are the days when they used to send physical notices. No, they will send online notices. For example, if you are a taxpayer, which I am by the way, and I'm pretty sure many of you are taxpayers, there is a portal, income tax portal, which has been established. Everything is through the portal itself. So in the portal, they will send a tax notice to you. Even to your registered email ID, they will send a notice. Now you will have to go online and submit all the documents that are required. So you do not have to go to the offices again. There is no physical, right, connect between again the tax officer as well as the taxpayer. Everything has to be done online. Now what you will do? The tax official says, or the tax authority says, you are supposed to pay 3 lakh rupees. You will appeal against it. Is it okay? You will appeal against it and submit more documents. that is again done online itself. Hence, this is called as faceless appeal system. Okay, faceless appeal system. So one is a faceless assessment, second one is a faceless appeal. Now, should you write all the story in the exam? Please don't write the story. I gave you example. I'm a taxpayer, etc., etc. Don't write the story. UPSC will not ask you the story. Right? What is the concept? That is more important. Why are we doing all of this? Why are we doing? To improve transparency, to increase efficiency, to hold the tax officials more accountable, right? And to reduce the human interface. That is the objective. And the third one is a taxpayer charter, a document. Taxpayer charter is nothing but a document. In the document, the government has classified, right, certain commitments of the tax officials. That is, the tax authorities always will have to be courteous to taxpayers. Right? Have you ever interacted with a tax official? Let me know. Was the interaction very, very courteous? Was the tax official very welcoming of your doubts? Was the tax official, right, very, very friendly with you in terms of resolving your doubts, etc., etc.? Right? That generally doesn't happen. That generally doesn't happen. And once you become IS officers, you will become a part of that. Right? A bureaucracy. Bureaucracy, it's a different breed altogether. Anyways, what are the commitments? What are the commitments of the tax officials or the tax department? They will have to be courteous, right? They will have to treat taxpayers, right, honestly. They will have to assume that taxpayers are honest and treat them likewise. Whenever there is an issue with certain taxes, provide for a system of appeals, provide for a system of review of these appeals, etc., etc. So these are some of the commitments of the tax department. And right, what are the obligations of taxpayers? It's not just the tax department. Even the taxpayers also have to follow something. What we are supposed to do? Keep all the documentation. Whenever you want to file the taxes, whatever are the required documents, collect all the required documents, keep those documents. Whenever called upon, whenever requested, submit all these documents. Whatever is your source of income, please disclose the right source of income, etc., etc., etc. So these are some of the things that the taxpayers are supposed to do, as well as the tax department is supposed to do. This document is referred to as a taxpayer charter. Okay, right? So this is basically the idea of the reforms which have been implemented. Can anybody file a case if they violate a charter? Charter is not a law. Can you understand this? Charter is not a law. For example, again, I'll connect it to polity because you'll suddenly understand. Directive principles, are they enforceable? Directive principles, are they enforceable? For those of whom polity is over, it's good. You can answer it. For those of whom polity is over, ignore it. When polity will be taught again to you, will understand. Right? These are just like those principles. Right? Tax department is supposed to be like this. For example, imagine, right, one of them says the tax officials will have to be courteous. Imagine if these are applicable, right, these are enforceable, you can simply go to a court and say, this tax official was rude to me. I hope you understand. You can simply go to a court and file a case against the tax official and say, I went to this office, but he was rude to me. He did not talk to me properly. Right? Take a complaint. I will file a case against him. But please understand, these are not enforceable in nature. It's basically the idea. Idea is just to make taxpayers also follow something, tax officials also follow something. That's basically the taxpayer charter. Done? Okay. Last concept under taxation, Laffer curve. Okay. Last concept under taxation, Laffer curve. Now, what is this Laffer curve? And many of you are asking, sir, kind of questions that can be asked, etc. I'll explain that. After this, everything is question only. Have a look at this. After this, everything is question only. Right? Have patience. Laffer curve. Right? Laffer curve, point number 1, was given by one of the US economists by the name of Arthur Laffer. Arthur Laffer. Okay, point number one. And what does the Laffer curve actually state? What does it actually state? Follow the explanation now. It states that as the tax rates will keep on increasing, the tax revenue collected by the government will also keep on increasing. There are two parts to the theory. Follow this. When the government will increase the tax rate, the revenue collected by the government will increase. But after certain point, if the tax rate is increased, government revenues will not increase, rather fall. This is the statement. I have not explained. This is the statement. Okay, now let's start. What does it actually mean? Let's say hypothetically. Again, underline the term hypothetically. Why I'm saying hypothetically? Because this expert did not tell you what is exactly the rate. There is no formula to find out what is this rate. Right? The expert basically said, you keep on increasing the tax rate, your tax revenue will increase. But after a certain point, if you increase it further, your revenue will not increase, but rather fall. Why he has said that, I'll explain. But is it okay when I say this? What is this tax rate? It has not been defined. What is this tax rate? There is no definition, there is no number, there is no formula. So let's assume this tax rate is 35%. Let's assume 35%. So what does the theory say? From 0%, if you keep on increasing the tax rate till 35%, your tax revenue will keep on increasing. But if you cross 35%, if you cross this threshold of 35, further increase it, let's say to 37%, increase it to 42%, increase it to 80%, and finally increase it to 100%, your tax revenue will not rise, rather the tax revenue will fall. It will not increase, but it will start falling down. Why? Let me explain. Any problem with the first part of the statement? Let me know, because it is self-explanatory. Any problem with the first part of the statement? That is, if the tax rate will go up, amount of taxes that you're collecting will go up. Does it make sense or not? Of course, yes. Right? Imagine you're earning an income of 100. Imagine you're earning 100, tax rate was 10%, now it will be increased to 20%. Will the government tax revenue go up? Of course, yes. So up to a certain point of time, in this example, hypothetically 35%. Up to a certain point of time, it will keep on increasing. But after 35%, what will happen? The author says, right, that is the expert says, after you cross 35% and increase it, people will start substituting work with leisure. Understand my statement now. After you increase this beyond 35%, people will start replacing work with leisure. What is the meaning of it? People, rather than working more and more, now they will reduce their work, they will start taking more rest. You will ask me, why, sir? Why are the people taking more rest? They should work more. Why are they taking more rest? A reason that the expert says is, now the people will feel the burden of taxation. They will feel the burden of taxation. They'll simply feel that more I earn, more I'm paying to the government. And government has continuously increased taxation. What is the point in earning more then? I will reduce my work. I will take more rest rather than working more. And look at the extreme example. Look at the extremity of it. Tax rate of 100%. Tax rate of 100% simply means what? Whatever you earn, you will give it to government. Will you work then? Think of it. Whatever you work and earn, you will give it to government. That is 100% tax rate. Will you even work in that situation? You will not work. If you do not work, no income. If there is no income, tax rate of 100%, but government will collect how much income? 0 rupee income. I hope you understand. I hope you understand this. This is basically the idea of a Laffer curve. This is basically idea of Laffer curve. Again, despite saying this, there are two people who are asking, sir, you have written 35%. It is always 35%. Listen to what I keep on telling you people. This is basically repeating the same thing multiple times. This is the fifth time I'm telling this. I use the term hypothetically. Do you not listen to that? And why I said hypothetically? Because I clearly stated the economist has not given a formula for it. Right? The economist has not given anything related to this. He simply says, you increase, tax revenue will increase. But if you increase it beyond a certain rate, revenue will not increase, rather decrease. Now, what is that rate? There is no formula for it. What is that rate? There is absolutely no way to find it out. Right? This is basically Laffer curve. Is it applicable in real life? Absolutely no. There are a lot of problems with this. What is the problem? You tell me. You tell me, if the government will impose, let's say, slightly more taxes, will you reduce the burden of work? Will you basically, reduce the amount of work that you're doing? Absolutely no. People will start earning more and more, because now they know that anyways they will pay taxes, but they want to have more disposable income. Does it make sense or not? They will have to pay taxes to the government, right? They will earn more income because they want to have more disposable income. That's a point number one. Point number two, don't you think there are so many other factors that will influence your tax revenue collection? Only tax rate is not the factor. I hope you understand. Right? Because there are so many factors in the economy. Right? For example, during pandemic, let's say during pandemic, government will increase the tax rate from 30% to 35%. Right? Just because government has increased the tax rate, do you think government tax revenues will increase? No, there are so many factors in the market. What about income earned by the people? What about growth in the economy? Etc., etc., etc. So that's the reason, right? It's a proposal, it's a theory. And some of you are asking, in that case, why should I learn it? Because UPSC will ask questions on it. That is a precise reason, right? Why only theory is required, and problems related to this, remember, more than sufficient. Done? Right? Let me go to the questions now. Right? So this is the discussion related to taxation. Please revise it. Please revise it. Right? So be very, very careful. This chapter is very important for both prelims as well as mains. Prelims as well as mains, both very, very important. Okay, done. So, sir, there are so many concepts in the taxation chapter. Is it required? My dear, book is around 800 pages. Should you read all the 800 pages? And can I tell you a peculiar argument of the students? And you will agree with me, right? I'm pretty sure you will agree with me. When I discuss something that is not there in the book, none of you will say, why are you discussing it? It is not there in the book. None of you will argue with me. But when I say this is more than sufficient for UPSC, you will complain, saying that, sir, why not? Why are you not discussing everything in the book? Right? You cannot have it both the ways. You cannot have it both the ways. Focus on what we are discussing in the classroom. And I'm sure, if you check the PPT, the classes that I'm taking, if you check the PPT, many of the things that I'm discussing will not be mentioned in the book. Right? Why? I cannot simply say it is not mentioned in the book, I'll not teach. That's a wrong argument altogether. If it is relevant for UPSC, I will have to teach it. I will have to cover that concept. Okay? Right? So that's a precise reason. Don't read the book from page number 1 to page number 800. Not at all needed for UPSC. Okay. So tax reform for pre or mains. It can be asked for prelims. It can be asked for mains as well. Okay. Sir, you said in the first calculation in intrastate VAT at production side service tax is applicable, then why ITC is given by the state? Arey Baba, I am not able to understand the question itself. In the first calculation in intrastate VAT at production side service tax is applicable, then why ITC is given by the states? ITC is not given by the states. I never said ITC is given by the states. There's a question on the GST calculation on intrastate. Sir, you are simply saying ITC is given by the states. I'm saying ITC is not given by the states. Okay. Now, come to this. Okay. Which one of the following not a feature of value added tax? Can we solve it? Because it is already there right in front of you for last 2 minutes. I'm pretty sure without listening to me, many of you would have already started solve the question. Can I solve it directly? It is a multi-point destination based system of taxation. Correct or wrong? It is a feature. We have discussed this. It's a feature. It is imposed at multiple points and collected. Multi-point. It is a destination? Of course, yes. It is a tax levied on value addition at each stage of transaction in the production distribution chain. At every stage, how much is the value addition? On that, we are going to impose a tax. That's the whole idea of VAT. Correct. It is a tax on the final consumption of goods or services and must ultimately be borne by the consumer. Is it not a feature of any indirect tax? Think of it. Statement C. Is it not a feature of any indirect tax? Can I say GST is also C only? Let me know if you disagree with me. Right? GST is also, right, option, that is statement C. Don't you think statement C is applicable to GST also? That is, it is a tax which is imposed on the customer. And whatever is the indirect taxes ultimately will have to be borne by the customer. Any indirect tax for that matter. Right? Statement C is correct. And finally, right, D. It is basically a subject of the central government. Is it? VAT is a subject of central government. No, it is a subject of state government. Option D is wrong. Option D is wrong. So the right option for this question will be right option D. You are supposed to find which is not a feature. Let's start. Let's start. Okay, 67% have answered correctly. It should be much more than that. I'll tell you, many of you will accuse me of giving a question without covering a concept. You will have a small heart attack and say, sir, current account deficit, you have not covered. Right? Yes, I do agree, I have not covered it. But let's solve it. Let's solve it. Without even coverage, let's solve it. Statement 1. GST will replace multiple taxes collected by multiple authorities and will thus create single market in India. Basically what we have discussed, national market. Single market means national market. One product throughout India will attract same tax rate. Statement 1 is correct. Statement 2. It will drastically reduce the current account deficit of India and will enable it to increase foreign exchange reserves. Now, I have not covered current account deficit. I know that. But focus on the term drastically. Focus on the term drastically and focus on the term enormously. How many of you think a reform such as GST will lead to changes drastically in Indian economy? Let me see. Right? Right? How many of you think that any reform will change anything in the economy drastically? Absolutely no. Absolutely no. If you have any example, please do let me know. Right? Look at the third statement. In fact, look at the third statement. it will enormously increase the growth and size of the India and will enable it to overtake China. If that was possible, we would have implemented GST many decades ago, not in 2017. So third one is wrong. Can I use as an elimination method? Can I use this as an elimination method? So third one, gone. You have the right option. But anyways, it will not enormously. Please understand, it is basically a key term for you. It's a key term. Whenever in the UPSC they use the term enormously, quickly, rapidly, right, like these extreme terms. These are very extreme terms. It will not happen. Especially in economics, it will not happen. Right? So second one is wrong. Third one is wrong. I know I've not covered current account deficit, right? Because some of you are asking, I've not discussed the idea of a current account. Hence, right now, right, please take it as wrong. Right? I've not discussed current account deficit. I know that. And in order to tell you why second is wrong, I'll have to teach you current account deficit first. So because the key term is drastically, I'll simply say it is wrong. So second one is wrong, third one is wrong. Right option is option A. Okay. Focus on this. This is much more technical. Okay, 43% have answered correctly. Why? It should have been more. It should have been more. Right? These are the kind of, let's say, the analytical questions. These are analytical in nature because you should properly have the basics. If the basics are slightly weaker, these questions will become very difficult for you. Let's start. A higher tax revenue can be collected by imposing higher tax on commodities, which are habit forming. Let me start with the last one, which are habit forming. Okay. What is the question asking you? By imposing a higher tax, can you collect higher revenues? They have given you three situations. Simple. By imposing a higher tax, will you be able to collect higher revenues? Yes or no? They have given you three situations. Let me start with the third one here, which are habit forming. For example, tobacco, alcohol. Can government collect more taxes by imposing higher taxes on tobacco and alcohol? Yes or no? Right, let me check how you people think. I know the answer. Let me check. I'll repeat it again. Habit forming means which will become a part of consumption. Can government impose a higher tax on alcohol, right? Let's say tobacco, and collect more amount of tax revenue? Answer is yes. Answer is yes. Why? These are habit forming because it becomes part of your consumption now. You will keep on consuming them despite the prices being higher. Right? Don't you think alcohol? If the price is increased by 10 rupees, do you think people will stop consuming alcohol? I hope you understand. Right? So no. 3, yes, it will help government to collect more taxes, which are having highly elastic demand. This is where you apply what you have learned in the first or second class, which are having highly elastic demand. What do you mean by elastic demand? Please remember the basics. What is elastic demand? If the price changes, demand will change by a very large percentage. Do you remember that? Having highly elastic demand means if the price will change, the demand will change by a large percentage. For example, price will change by, let's say, 1%. Price will change by 1%. demand will change by, let's say, 10%. Can I call this product as having high elastic demand? Don't be confused. Some of you are confused here, right? What is elastic demand? Elastic demand means a demand should change by a very large number. So if the price changes by 1%, demand will change by 10%. Highly elastic demand. Now you tell me, government will impose a higher tax. What will happen to prices? What will happen to prices? Prices will go up. And when the product has a highly elastic demand, price goes up. What will happen to demand? Demand will abruptly fall. Demand will suddenly fall down in the market. And when the demand will fall down, don't you think government taxes collection will also go down? Is it okay? Government taxes collected will also automatically go down. So can 2 be a right statement here? 2 is wrong. 2 is wrong because the government revenues will fall. First one, which have highly inelastic demand. Highly inelastic demand, right? Highly inelastic demand means what? Price will change by 1%. Demand will change by, let's say, 0.001%. Can I call this as a highly inelastic demand? Let me know. Highly inelastic demand. Sir, any example? Salt. Take the example, salt, petrol, diesel, milk. These are highly having, or these are the products having highly inelastic demand. So when government will increase the taxes, market prices will go up, but the demand will marginally change. Very, very small, negligible change. So government will be able to collect more and more tax revenues. So 1 is correct, 3 is correct. Right option for the question is option B, 1 and 3. Descriptive question. Please have a look at the descriptive question. Discuss the rationale for introducing GST in India. Bring out critically the reasons for the delay in a rollout for its regime. There are 2 parts to this question. Simple. There are 2 parts. One is why did we introduce GST? Second one is why there was a delay in introduction of GST. At first part should not be very difficult for you. Start with the introduction. Start with introduction. What is the introduction? GST, that is goods and services tax, is a very important indirect tax reform implemented by the government from 1st July 2017. That's it. Don't write a history here. Don't write a full film story here itself. Come to the main body. What is there in the main body? Right, part 1, why the government has implemented, right? What are the reasons why government has implemented the goods and services tax? First one, in order to address cascading effect. Second one, in order to promote ease of doing business. Third, to reduce the cost of logistics. Fourth, to harmonize indirect taxation structure, etc., etc., etc. We have discussed all of it. So these are the reasons why Government of India has introduced GST, goods and services tax. But why there was a delay? Why there was a delay in terms of implementation of GST? Because understand the logic here. The concept of GST was not introduced recently. The discussion on GST has been very old. In fact, please remember this. India implemented GST from 1st July 2017. By that time, more than 150 countries had already implemented GST. Is it okay? More than 150 countries have already implemented GST. We are implementing GST late, in fact. Why? Why are we implementing GST with so much of delay? Reasons are simple. The Constitution of India has given the taxation powers between the center and state. Now we wanted to bring in states on board, right? Ask them to agree to all of these and then introduce GST. And how many of you think bringing all the states on board means making all the states agree to the law of GST is easier? Right? How many of you think making all the states agree to GST was very easier? Absolutely no. Right? Very, very long time consuming process. Second, Right, I'll come back to the question. There is a very interesting question. Second, now one more argument was, what should be brought under GST, what should not be brought under GST. Third one, if it is brought under GST, what should be the rate of GST applicable? Will this rate affect common man? Will this rate have an impact on poor households, etc., etc.? Fifth one, if I'm going to implement GST, right, I should also ensure that states will also have compensation. So there were so many issues. There were so many issues that have been discussed threadbare in detail. Then we have implemented. So that is the precise reason there is a delay in the implementation of GST. Done? Okay. So there is a question, sir, but earlier you said no other country has a GST model. My dear, I'll repeat what I said and let me know if I'm changing my words now. I said no other country in the world has implemented GST on the level that India has implemented. Can you understand the differences between two statements? You are telling me, sir, you said no other country has implemented GST. I am saying I did not say that. I said no other country in the world has implemented GST at a level that India has implemented. I hope you understand this. I hope you understand. Both are different. More than 150 countries have implemented GST. Okay, done? Okay. Right, one more question here. Enumerate the indirect taxes which have been subsumed by the goods and services tax. What do you mean by enumerate? Enumerate simply means list. List all the indirect taxes which are covered under the GST. Also comment on the revenue implications of GST on Indian economy. Right, first part is again introduction. What is a GST? Write a short introduction to that. Second part to the question, what are the types of taxes at the central level, at the state level, which have been brought under the GST, right? List them out. And the third part to this is, what is the revenue implication? What is the revenue implication of GST? First one, when the states are going to give away the taxation power, the revenues of the states would be affected. I hope you understand. Right, when the states are going to give up their taxation power, the revenues of the states would be affected. Second one, GST will lead to a lot of formalization. It will lead to a lot of formalization. Now, Government of India will come to know how much even these companies are making in terms of revenues, in terms of sales. Now we can, right, have more enforceability, collect more taxes on these companies. Right, third one, more and more established have come under the GST network now. Compared to pre-GST, under GST, more and more companies have come under GST, which automatically means more part of the economy is under GST, revenue collections will suddenly improve or automatically improve over a period of time. Right, so these are some of the very important revenue implications associated with implementation of GST. Okay. Right, so these are the questions or descriptive questions which have come in the last couple of years, as well as the MCQ questions which have come in the last couple of years regarding taxation. The next chapter that we'll be covering is a concept of money and banking. Next concept is money and banking. But before that, right, what are the points? What are the points? As usual, this is a common exercise. This is a ritual. First, I'll tell you what we'll be covering and right, then we will cover it. Sir, what about the previous questions of national income? My dear, yesterday have you not discussed this? Yesterday we have discussed, yes or no? Right, there are two people who are saying, sir, you have not discussed the previous year questions on national income. Yesterday I have discussed it. Arey Baba, yes or no, tell me. We have not discussed national income. Okay, no issues. Okay, question on GDP was discussed. The issue is what I'll tell you. Half of you are saying yes, half of you are saying no. It cannot be like that. I hope you understand, it cannot be like that. Did we not discuss a GDP deflator question yesterday? GDP, sir, have poll for that. You're simply wasting time. Okay, right? I believe I've discussed a GDP deflator, and we can come to know. Just check the annotated PPT that you have received yesterday. Simple. Annotated PPT yesterday. If I've discussed a question, there will be annotations on it. Right? Just check it. So what are the points I'll cover? Right? What are the points I'll cover? Right? Money and the types of money. Okay. The functions of a bank. I'll check it. Don't worry. If it is not discussed, no issues. I'll check it. Don't worry. Banking structure in India. RBI, Reserve Bank of India. Very, very important. Right? Very, very important. Okay. RBI. Issue of bank mergers. Lending rate regimes. Concept of Basel guidelines. Lot of committees will discuss. NPA and differentiated banks. Right? And in addition to this, I'm pretty sure you have heard of this. NABFID. Have you come across this? NABFID. National Bank for Financing Infrastructure Development. We'll discuss that in the chapter. NARCL. National Asset Reconstruction Company Limited. NARCL. Etc. etc. Right? So we will discuss a lot of current affairs in the discussion of all of this. Right? Now let me start with the basic idea. The term money. Right? Let me start with the basic idea, that is term money. Now what is money? I'm pretty sure all of you have money. I hope you understand. Some will have more, some will have less. That is not the scope of discussion here. But I'm pretty sure all of you have money. For example, is this money? Is this money or not? Of course, yes, this is money. But what is money? I hope you understand. What is money? Money is a mode of exchange. Right? I hope you understand. I'm defining, by the way. What is money? Money is a mode of exchange. Sir, what do you mean by mode of exchange? You will use this 100 rupee in the market to purchase the bottle. All of you will agree? You will use this money, right, in the market to purchase bottle. Sir, only bottle? Of course no. You can use this 100 rupee to purchase fruits, 100 rupee to purchase food, 100 rupee to purchase rice, etc. 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 That's the reason I said money is a mode of exchange or medium of exchange. That is, using money, transactions can be conducted. You can purchase something, and instead of that product, you will pay something. That is money. Now, all of you will use this kind of money. I'm pretty sure all of you are using this kind of money. It could be 100, it could be 200, it could be 50, it could be 2000, etc. 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 But focus on this carefully. The money that I'm holding in my hand, or the money that you have in your wallet, that is called as fiat money. That is referred to as fiat money. What do you mean by the term fiat here? Fiat simply means order of the government. Is it okay? Fiat here simply means order of the government. Through the order of the government, we have introduced this money in the market. Any difficulty, please do let me know. But previously, before this money, right, there was no printed currency notes in the market. Previously. Sir, what do you mean by previously? Ancient India, medieval India, right? For example, during, let's say, the Vijayanagara Empire, during, let's say, the concept of Mughal Empire, whatever you want to talk about, don't worry. There was no concept of printed currency notes. Instead, we used to use commodity money. We used something called as a commodity money. For example, in your high school, I'm pretty sure you have come across this. Have you come across gold coins? Right? That is during, let's say, Vijayanagara period. You must have read about it. During Vijayanagara period, gold was actually weighed like this and sold, they will say. Right? gold coins were used, right? Shells were used, seashells were used, pearls were used, right? Or bronze coins were used. All of these are nothing but commodities. All of this is nothing but commodity, right? So understand this. Whenever instead of the currency coins that you're looking or currency notes you're looking right now, instead of this, earlier, for conducting trade, for a medium of exchange, when you used commodities, that was referred to as commodity money. Any issue here? Any issue, please do let me know. Right? What is gold money? Gold is not money here. Gold coins were used as money. Gold pieces were used as money. And whenever you talk about commodity money, right, there is a term called as intrinsic value. Right? Whenever you talk about commodity money, there is a term called as intrinsic value. Now let me give you a very simple example of what is intrinsic value. All of you can see 100 rupee currency note here. Let me know. In my hand, I am holding 100 rupee currency note. Now this 100 rupee currency note is printed on a piece of paper. Piece of paper. That piece of paper has a value of 100 because there is a 100 rupee printed here. Is the logic okay? That piece of paper has a value of 100 rupee, right? Basically, because 100 rupee, that 100 number is printed here. What if that 100 rupee number is not there? Right? What if that 100 rupee number is not there? Do you think this piece of paper will have same value? Absolutely worthless. I hope you understand this. It is absolutely worthless. Meaning what? It's basically a piece of paper. Does piece of paper have market value? Does this piece of paper have any market value? No. But because I'm printing 100 rupee on the piece of paper, the value of this becomes 100. In the same way now, replace piece of paper with gold. Think of it. Right? Replace piece of paper with gold. Now, don't you think gold itself has a market value? Is it okay? Right? Gold itself has a market value. Right? Nobody has to give value to it. Gold itself has market value. So what is the value of the asset? What is the value of the asset in the market is referred to as, right, intrinsic value. So when you talked about pearls, right? When you talk about pearls, do they have market value? These are assets. Do they have any value in the market? Yes. If you talk about bronze, does it have a value in the market? Yes. Right? So understand the logic here. Whenever commodities were used as money for conducting transactions, commodity itself had value. That is intrinsic value. Right? Nobody can give the value to it. It always has a value. Gold has a value. Nobody needs to give it value. Gold always has a value. But this piece of paper, tell me, does the piece of paper have a value? No. Government has to give the value to it. Government will print 100 rupee, then it becomes a value 100 rupee. Government will print 2000 rupee, then it becomes equal to 2000 rupee in the market. Now, can I add one more point here? Fiat money doesn't have intrinsic value. Let me know, right? Whether you agree, disagree, whether this is difficult, etc. Let me know. Commodity money has intrinsic value. Fiat money doesn't have intrinsic value, right? Meaning what? What is the value of this piece of paper? Nothing. But government will give the value to it, right? By printing 2000 rupee, by printing 1000 rupee. Of course, 1000 rupee note is not there, 200 rupee, etc. So whenever you talk about coins, whenever you talk about currency notes that we are using today, I repeat, whenever you talk about coins or currency notes that we are using today, these are called as fiat money. And fiat money does not have any intrinsic value. But on the other hand, commodity money commodity itself is having a value, hence that value itself will be used in the market as a medium of exchange. Right, so this is commodity money, this is fiat money. There's a term called as liquidity. What is liquidity here? Understand this point carefully. Liquidity here simply means how quickly you can convert an asset into money. I'll repeat the statement. Follow the statement first. I'll give you examples later. Right, that is liquidity means how quickly you can convert an asset into money. Let me give you example here. Imagine you keep 100 rupees in a bank. Imagine you have kept 100 rupees in a bank, let's say fixed deposit. You have kept it in the form of fixed deposit for 1 year. And another example, you have a cash of 100 rupees. You have a cash of 100 rupees. Now tell me which of the two examples have higher liquidity. I repeat, what is the meaning of the term liquidity? How quickly you can convert this asset into money. That is liquidity. Right? One example, you have kept 100 rupee in an FD. Another example, 100 rupee in cash. All of you will agree? Example 2 has a very high liquidity. 2 of you are saying example 1. How? How? Right, sir, why do you say cash, right, has higher liquidity? Understand. Do you need to convert this? Let me know. Do you need to convert this? Anybody who is here says, sir, I need to convert this into money. No, it is already in the form of money. You do not have to convert it. This has the highest liquidity. I'll repeat it. This has highest liquidity. Sir, what is the importance of it? Let me give you a very simple example. Imagine you are a shopkeeper. I will come to you. I'll purchase a bottle and I'll give you 100. Medium of exchange. I will come to your shop. I will have money in the fixed deposit. I will take the bottle, but don't you think first I need to break the fixed deposit? I need to close the fixed deposit, convert that into cash, then pay the money to you. So have a look at this. Cash, right? Whenever you have cash with you, it has highest liquidity. Can I ask you one more question? 100 rupee cash in one hand, 100 rupee worth of gold in the other hand. I hope you understand. 100 rupee worth of cash, 100 rupee gold in the other hand. Which has more liquidity? Which has more liquidity? Cash. Cash always has the highest liquidity. Do not have any doubt regarding this. Why? It is already there in the form of money, which is acceptable in the market. Which is acceptable in the market. Done? So one is commodity money. Second one is fiat money. Third one is fiduciary money. What do you mean by fiduciary money? It is not declared as legal tender by the government. That's a point number 1. Let me explain this. It is not declared as a legal tender by the government. What do you mean by this? Imagine I'm a shopkeeper. You will come to my shop. You will purchase a product. You will pay me 100 rupees. I cannot deny the acceptance. Is it okay? I cannot deny accepting 100. I'll have to accept this 100 rupee note. Right? There is no option available for me. I'll have to accept it. That is basically reason why this is called as a legal tender. Legal tender means any currency in the market, anything that has been declared by the government as money which can be used as a medium of exchange. Is it okay? All of you can understand the term legal tender? Any difficulty, please do let me know. We'll stop after this. Right? What is a legal tender? Legal tender means anything that is declared by the government which can be used as money in the market can be used as a medium of exchange. Is 100 rupee a legal tender? Yes. 2000 rupee? Yes. 50 rupee. Yes. So if I come to your shop, if I purchase something, I will pay 100 rupees. You cannot simply say I will not accept it. You will have to accept it. Right? Again, don't say, sir, what if I don't have a change, etc., etc. Those are not the issues here. Right? If I purchase, let's say 100 rupee worth of goods, and if I pay this 100 rupee note, you cannot deny it. You will have to accept it. There is no option available to you. This is called as a legal tender. Right? So the currencies in India, fiat money in India is a legal tender. Okay? Now have a look at this. The fiduciary money or the bank money is not a legal tender. Right? What is this? Why are we saying fiduciary money or bank money is not a legal tender? Let me start with example here, checks. Right? Let me start with example of checks here. So have a look at this. Imagine you have a very large showroom. I will come to your showroom, purchase a lot of goods from your showroom. I will make a payment in the form of check. I will issue a check to you. Should you accept it? It is entirely your decision. I hope you understand this. I will purchase, let's say, 10 lakh rupees worth of goods from your shop. Should you accept the check? It is your decision. Whether you want to accept it or you do not want to accept it, it is entirely your decision. Government doesn't force you. Why? I'll tell you the answer to this. I will issue a check worth 10 lakh rupees to you, give it to you. I will take all the goods and run away. Now tomorrow you will go to the bank, deposit the check, then you realize it's a fake document. It's a fake check. Or check is genuine. The check is genuine, but I do not have any money in my bank account. I hope you understand. Right? The check is genuine. That the bank itself has given the check to me, but I do not have any money in the bank account. Right? Now, don't you think, being worried about it, the sellers, right, the people who are selling the goods or services, they will decide whether they want to accept the check payment or no check payment. I hope you understand. That is basically the idea why we say fiduciary money is not a legal tender. It is not a legal tender. Okay, so usually it is not declared as a legal tender. Right, so this is the example of fiduciary money. Checks which are issued by the banks are basically fiduciary money. Any difficulty? Is commodity money a fiduciary money? My dear, please understand, commodity means a commodity such as, and you will ask me, sir, what do you mean by commodity? Ask me, sir, what do you mean by commodity? Commodity means anything that is used in the market as an input. It is used as an input in the market. It is generally referred to as a commodity. For example, crude oil. It's a commodity. I hope you understand. Crude oil is a commodity. Money is a commodity. Steel is a commodity. How many of you think a check is a commodity? I hope you understand now. How many of you think the check means, you must have seen a check leaf like this, right? Pay so much amount of money to the person, amount will be written here, signature will be done here, check. How many of you think a check is a commodity? No, it is not a commodity. Okay, so there is a difference. Both are different. Okay, done. So let me stop the discussion here and let me pick up the question. I'm sorry, let me pick up commercial bank money from tomorrow. But before that, let me address your questions. Commodity money is also not a legal tender. Of course, yes. But who is using commodity money today in India? You tell me. Who is using commodity money in India today? Nobody uses commodity money, right? Have you anywhere seen, right, people trading in terms of, let's say, gold coins? No, money is used. Money, that is fiat money. Okay. Demand draft. Sir, what is a demand draft? Have you not seen DD? Right? A draft is nothing but a short form, demand draft, DD. Whenever you wanted to apply for, let's say, an engineering college, you wanted to get the admission, they would say, please go to a bank and get a demand draft of so much. That is basically DDs, right? Demand drafts. What is barter system? Barter system is a mode of exchange where goods are exchanged with other goods or services. Goods or services are exchanged with goods or services. Now, commodity might be part of it. I understand. Commodity might be part of it. But barter is a much bigger system, right? Where goods or services are exchanged with goods or services. Okay. Okay. Any other question? Any other question? 5 rupee coin has intrinsic value as it is made of metal. My dear, what is the value of the metal doesn't matter. Government has given the value to it. What is the value in the 5 rupee coin doesn't matter. How much steel is there, how much iron is there, doesn't matter. Government has given the value 5 rupees to that. That is basically the concept of what is that? The fiat money. So chapter 2 we have not discussed. No issues. I'll pick it up tomorrow. Please don't worry. If I've not discussed, I'll pick it up. I'm not going to run away. I'll pick it up. Sir, your class is enough for UPSC. I never said so. I will never say that only my classes are sufficient. If I do that, I'm doing a disservice to you. Why? Read current affairs. Right? I'll give a very simple example. Today's newspaper, Hindu newspaper. In the central page, there is an article on Finance Commission. Please read that. Please read that. Right? And in the first page, there is an article on exports. Right? The exports have fallen, imports have fallen, the trade deficit has increased, etc., etc. Please read that article. So again, every class I keep on telling this. I never claim that only my classes will help in cracking UPSC, GS paper 3. Absolutely no. I will never claim that. You will have to read a lot of current affairs. You will have to read a lot of current affairs. Okay. Why 2000 rupees have disappeared? I don't know the reason for that. Even Government of India has not given any reason. Okay. Okay, any other questions? Any other question? Is gold coin a commodity money? Gold coin can be a commodity money, but please again think of this now. Please think of it. Are we using commodity money today? Please think of it. Right? Are we using commodity money today? For example, imagine you'll go to a shop, purchase a lot of goods. Will you pay in gold? Who will accept it? Right? What is the guarantee it is? Right? Having 100% purity, etc. Okay. Done then. Let's stop the discussion here. Tomorrow we'll continue from the concept of the commercial bank money. Right? Let's start from the concept of commercial bank money. Okay. So that's it from my side. Take care. See you tomorrow. Okay. See you tomorrow.